Okay, good morning, everyone. Welcome to Baiju's Exam Prep IAS. This is Sham Kagor here. Now, before I start the discussion, if there is no issue with the sound, can you please give me a thumbs up? If I'm audible to you, please do let me know so that we can start the discussion. Done. Thank you. So, let's start. So, last week, Friday, what we have discussed, we started with the concept of non performing asset, correct? We started with the concept of non performing asset. In case of a non performing asset, what is the definition? If you take a loan and you do not make a repayment on the loan for 90 days, simple. You take a loan and do not repay for 90 days, then after 90 days duration, your loan will be classified as a non-performing asset. And you have taken the loan and you are continuously repaying without any default, you are continuously repaying the loan, then your loan will be referred to as a standard asset by the bank. So standard asset or non-performing asset. Now, before moving to non-performing asset, they will wait for 90 days, correct? They will wait for 90 days. And in case of 90 days, again, there's a classification. Special mention account 0, special mention account 1, special mention account, right, 2. If the delay, that is, if the default is for 30 days, then it is a SMA 0. And from 31 days to 60 days, it is called as a SMA 1. And 61 days to 90 days, it is called as SMA 2. Now, within NPAs also, within non-performing assets also, there is a classification. If you have not repaid and the account has become NPA, for 1 year, this is called as a substandard. More than 1 year, it is called as a doubtful. And after 3 years, that is a substandard 1 year, doubtful 3 years, total 4 years, your loan account will be classified as a loss-making asset. Loss-making asset by the banking sector. Now, why the NPAs are very high in case of India? Reasons are very simple. Willful defaulters are very high. There are a lot of governance issues. There is a slowdown and a recession in various markets. As a result of it, there is a huge impact on India's non-performing asset. After that, we have discussed the concept of reforms undertaken, right? Or before that, what is the problem if NPAs are very high? There are two students who are asking, has the class started? Yes, my dear, class has started. If I'm not visible to you, if I'm not audible to you, please hit the button refresh. That's it. Hit the button refresh. Or if the audio is not coming properly, there is a button by the name of fix audio. Please hit that. Right. So the class has started. So NPAs are very high, means losses are incurred by the bank. Investor confidence will be lost. Deposit mobilization will be affected. Lending activity will be affected. They'll start increasing the rate of interest, as a result of which loans taken will also be affected. Overall, it will have a limiting effect on the GDP growth of the Indian economy. Now, if the NPAs are very high, what reforms has been implemented? The best reform that we have discussed is Insolvency and Bankruptcy Code, IBC, Insolvency and Bankruptcy Code. Insolvency and Bankruptcy Code has been implemented since 2016 in India. And under IBC, there is an authority called as NCLT, National Company Law Tribunal. The bank will go to NCLT, file an application because the borrower has not repaid. Then what is the process? We have discussed that. After that, there is one more very important current affairs concept, that is NARCL, National Asset Reconstruction Company Limited. NARCL will basically handle the old NPAs, the legacy NPAs, or very old bad assets which are held in the balance sheet of the banking sector. Now, NARCL, right, basically it's a bad bank, it's an asset reconstruction company which will purchase bad loans, that is NPAs, very old NPAs from the banking sector. I will basically purchase it. And there is one more authority, IDRC. I said NARCL is a majorly owned by public sector bank, whereas IDRC is majorly owned by private sector bank. So IDRC will take this, sell it, resolve it in the market, take the money and give it to the bank. That is basically the model of NARCL. After that, we have discussed concept of a cooperative banking in India. Cooperative banking in India. Now, cooperative banking in India, right? What is the basic idea? In case of cooperative banking, these are types of right, the cooperative units at the banking level, which are present either in the urban market or in the rural market. In urban market, we will divide it either based on whether they are present in single state or multiple state, or whether they are scheduled or non-scheduled. On the other side, the rural cooperative banking, there are two classifications again there. One is basically the loans which are given for short duration to agriculture sector or medium duration. On the other side, the loans which are given for a longer duration. There is one more classification. Then I've discussed certain issues regarding cooperative banking structure in India, the dual regulation problem, etc. Then what Government of India has done with Banking Regulation Act of or Banking Amendment Regulation Act of 2020. After that, we started with the discussion of NABFID, National Bank for Financing Infrastructure Development. What is NABFID? It is a Development Finance Institute, DFI, Development Finance Institute, which will provide long-term loans, for the growth of infrastructure sector. We have discussed what is the structure. 100% owned by Government of India. Later it will be reduced to 26%. What are the objectives of NABFID, right? Why Government of India is promoting NABFID? What do you mean by long term loans for infrastructure, large value loans for infrastructure? What is the problem in banking sector to provide all these loans, right? I hope remember asset liability mismatch, etc. Now we have discussed the benefits. We were supposed to start with concerns. We have discussed the benefits. We are supposed to start with concerns. Let's finish it off. First one will be acquisition of land will be very difficult. That is, NABFID says, I want to promote infrastructure, right? I want to promote development of infrastructure projects. Now, don't you think one of the issues related to infrastructure projects will be acquisition of the land? Please do let me know. We have been discussing this idea of land acquisition multiple times now, right? Is it okay? That is basically land acquisition will be a problem. Okay. So you want to promote infrastructure, but acquiring land is a very difficult proposal in case of India. Second one is how to find a bankable infrastructure project. Now, what do you mean by bankable infrastructure project? Imagine you're the private sector investor. Okay, you're a private sector investor. You want to take a loan and invest the money in developing infrastructure project. Now, please tell me the development of this infrastructure project, are you going to face any kind of a risk? Let me know. Are you going to face any kind of a risk in association of development of this infrastructure project? Answer is yes. You'll face a lot of risk. For example, some of you are saying no. My dear, please think of it. You'll face a lot of risk. Sir, what do you mean by risk here? What if you start constructing, right, the infrastructure project? There is a pandemic, government will impose a lockdown, and there is no labor available to work in your infrastructure project. What if there is no labor available? Or you are importing something, right? You are importing a machinery. Government will impose restrictions or importing of any kind of machinery into India. You are importing something and you are paying in terms of dollars. Now there is a sudden change in rupee to dollar exchange rate, right? So don't you think there are lot of risk which are associated with construction of infrastructure? I'm giving you some of them. There will be lot of risk that you will face in development of infrastructure. Now question is, if you are going to take so much amount of a risk, invest so much amount of money by taking a loan and develop infrastructure, would you want a lower returns or a higher returns? Right? Of course, everybody would want appropriate returns based on the amount of risk that you are taking. So now question is, whatever infrastructure project I'm taking a risk in, how much returns am I going to get? Is it satisfactory for me or is it not satisfactory for me? How will the private investors be able to find out all of this? I hope you understand. Because they're taking a lot of risk, how will they able to find out how much returns they are going to earn? Is it satisfactory for them? It is not satisfactory for them. These are called as a bankable infrastructure projects. Risks are known, but the question is, are the returns sufficient for your liking? So how do you find bankable infrastructure projects? If the private sector says that these are not bankable infrastructure projects, doesn't matter. NABFID might provide loans, but they will not be willing to invest in such infrastructure projects. Third one is bond markets are not very well developed in India. Now, please understand this. I told you, if you remember it very carefully, I told you one of the ways NABFID wants to raise money to give loans for infrastructure project is by issuing bonds in the market. Correct? Please do correct me if I'm wrong. Right, last week Friday, I said NABFID, one of the ways that they want to raise money to provide loans, because what was one of the very important point of difference that we had discussed last week, right? I had given you the concept of commercial bank and a development bank, right? What is a commercial bank and what is the development bank, correct? In case of commercial bank, I said the banks will collect deposits and give loans. Whereas in the context of development bank, I said the development finance institutions, DFIs, do not collect a deposit from a customer. So NABFID is a type of a development finance institution only. Now the question is, from where will the DFI get the money then to provide loans? I said one of the ways that they will be able to raise money is by issuing bonds, long-term bonds in the market, collect money and use it for giving loans for infrastructure project. Now for the NABFID to raise money through by issuing the bonds, don't you think the bond market should be very well developed in the market? Think of it. Don't you think the bond market should be very well developed in the whole financial market in India? There is a market by the name of bond market in India. So should you not think of this? That is, before you raise money through issuing a bond, the market should be very well developed. Remember this, in case of India, the bond markets are not very well developed. Most of the bond market is occupied in the form of government bonds itself. Most of the bonds within the bond market in India, more than 70% of the bonds are basically government bonds. Very less of the bond market are from public sector bank, private sector, right, and private sector corporate, right, that is banks as well as corporate sector. So very few of these entities are issuing very few bonds from the private sector, non-government entities, right, in case of the bond market. Now, question is why the bond market is not very well developed. Is there any reform to promote bond market in India? We'll understand it later. Please don't worry. And finally, government clearances. Right, government clearances are very important here. What if the government changes and the clearances will get stuck up, or the minister is changed, or there is a delay in providing clearances between two ministries because two of the ministries are fighting with each other? So as a result of this, don't you think even NABFID wanting to promote the growth of infrastructure, government clearances, if they are delayed, right, the infrastructure development will be taking place at a very slow pace. So these are some of the concerns or issues regarding whether NABFID as a model will be successful or unsuccessful or will enjoy limited success. Done? So this is the complete model of NABFID. Please be very careful. Now, right, please understand. Let me know. Did you come across article on RRB in the last 2 to 3 days? Let me know. Did you people come across regional rural banks in the last 2 to 3 days in the newspaper? Yes or no? Right, Finance Minister has spoken about RRBs. I hope you understand this. Finance Minister has spoken about regional rural banks. Please read that article. And the argument was very simple. Finance Minister has to, RRBs have to adopt a technology. They'll have to focus on digitalization, promote, right, various types of products which are given by Government of India, such as Pradhan Mantri Jan Dhan Yojana, etc., etc. So RRBs were there in the discussion. I hope you have read the newspaper article regarding RRBs. Now, because I'm using the term newspaper here, if you ask me, sir, today's Hindu newspaper, any article which is important in Hindu newspaper, in the first page, there is an article on, right, railway station development. Please read that article today. Railway station development, right? There is a scheme which has been launched by Government of India wherein they want to modernize the railway stations in India. Please read that article. Specifically within that article, what is I am interested in what area I'm interested in, right? The second part of this article related to railway station, they have given in page number 10. That they have given in page number 10. They are talking about corridors. They are talking about, right, how the construction of roads, how construction of railway networks has reduced the right time taken for transportation, cost of transportation, etc. Please read that part. That is also equally important. Second article that I would recommend in today's Hindu newspaper is about inflation. They have given a very small article regarding inflation, right? Because now monetary policy review is going to take place. Now the monetary policy review is going to take place. They are talking about inflation, right? Not very important, but they have used certain terms such as headline inflation has been this much, right? Overall inflation has been less than 6% for so many months, right? RBI has not done anything, that is in terms of increase in the interest rates for a couple of months. Food inflation has been this much, etc., etc. Right? Third, which I would recommend, please do not miss out. Please do not miss out this article in Hindu newspaper today. They have written a very nice article on sugar production in India. Please read that article. Very big article, right? It's a very, very good article and a very important article for you, right? Sugar production. India has become the largest sugar producer in the global market now, because traditionally it has been the Brazil, right? The country Brazil, which has been the largest producer of sugar. India has overtaken Brazil to become the largest producer. So, but what is the problem with the sugar production? What is the problem with so much amount of sugar production? Sorry, sugar cane, not just sugar production, sugar cane production in the domestic market. They have written a very nice article in Hindu today. Please read that article. Please read that article. Very nice article. Done. So before I go forward, please do let me know. Did you people get a chance to read all the articles that I've given on Friday? In your busy schedule of UPSC preparation, did you people get a chance to read all the articles that I've given on Friday? Please tell me, were they relevant for UPSC? Were they right useful for you? Were you able to connect to what you're reading in the classroom, what you're learning in the classroom? Right? Some of you are saying, sir, very few of them were very important. My dear, please understand. The only reason I'm giving you those articles is all of them are very important. Don't say very few are very important. Please read all the articles. Right? That is how UPSC will pick up questions. Please read all the articles. Do not make a mistake of skipping those articles. Okay? Done. Let me go forward with the next model. Okay, let me go to the next model. Small finance banks, SFB, small finance banks. Now let's start. Small finance bank, what is a model? Please understand this. Point number one, can I say small finance banks are nothing but commercial banks in India? Let me know. Small finance banks are nothing but commercial banks in India. Again, please go back to the chart that I've given. Scheduled banks, right? The non-scheduled banks, all of them are part of commercial banks. So RBI is now promoting two types of commercial banks in India. One is called as a small finance bank, and second one is called as a payment bank. Now, point number one, many of you will have this doubt. Sir, why is RBI promoting new types of banks in India? We already have public sector banks. We already have private sector banks. So despite having public sector, private sector, RRB, cooperative, etc., why is RBI promoting, right, the payment bank as well as the small finance banks, SFBs and payment bank? Why? Now, please understand this argument of RBI. Right? Some of you will have this doubt and very valid doubt. Why? What is the reason? RBI says, I do not want to give a license immediately to any of these entities which want to operate as a universal bank. Right? Earlier, we have discussed the concept of universal bank. I hope you remember that. In the last week, we have discussed the idea of a universal bank. Imagine you'll approach RBI, you will ask for a license to open a universal bank. Do you think RBI should give you the license directly like this? If RBI will give you the license, right, without seeing whether you can operate a bank or not, don't you think RBI is putting the risk of the depositors, that is the money of the depositors, is put at a very high amount of a risk? Because what if you receive a banking license and you do not know how to operate a bank? Then it is very, very risky. So RBI simply argues that I will give you a license of universal bank, but not immediately. I will not give you the license to operate a universal bank immediately. First, operate for a couple of years as a payment bank. Operate as a payment bank for a certain number of years. And if you can sustain competition, if you can operate a payment bank profitably, then I might think of asking you to migrate into a small finance bank. And right now, you do not know what is the difference between SFB and a payment bank. Please don't worry, you will understand it. So first operate as a payment bank, earn profits, become sustainable, then I will ask you to get converted as a small finance bank. And once you operate as a small finance bank, become sustainable, right? Have a very good model. You know how to operate a bank now. Then I might ask you to convert into a universal bank. I might ask you to convert. I might give you a license now to convert into a universal bank. So tell me, what is better system? Directly giving a universal banking license, or asking you to become a payment bank first, become sustainable, become a SFB, then become a universal bank? Don't you think this kind of a movement, evolution, right? This kind of a evolution will provide, right, more stability to the banking sector? Some of you are saying, sir, direct licenses should be issued. My dear, if direct licenses are issued, what is the guarantee that the deposits that they will collect, they will be utilizing it in proper way? If I want to put in a very simple parlance, similar way, once you become IS officer, don't you think you will have to move through the ranks to become cabinet secretary? Think of it. And the role of cabinet secretary is there in the newspaper. Please be very, very careful. I hope you have read the newspaper article regarding cabinet secretary in India. So what do you think? Should you be appointed as a district collector, then slowly and steadily move upwards in the ranks, then finally become cabinet secretary, or directly make you cabinet secretary? Many of you simply say, sir, I want to become directly a cabinet secretary. My dear, but do you have the expertise? Do you know what is the role of a cabinet secretary? Do you know how to handle, right, all these pressures from different ministries? You do not have exposure to all of it. So you will have to move up the ranks, and the last highest level is the concept of cabinet secretary. Apply the same logic here. Apply same logic, right? So first operate as a payment bank. Now, right, operate as a small finance bank, and then operate as a universal bank. This is how RBI says you will have to move up in the ranking. Then that is point number one. Point number two, these types of banks will also help in promotion of financial inclusion. These types of banks will also help in promoting financial inclusion. Now, what do you mean by financial inclusion? Please listen to this concept very carefully. Financial inclusion means providing financial services in a cost effective way. Providing financial services in a cost effective way. In a cost effective way to needy people. In a cost effective way to needy population, to needy people. Can I give you a best example for financial inclusion in India? Pradhana Mantri Janadhan Yojana. Have you heard of this? Pradhana Mantri Janadhan Yojana. And please do let me know, have I given a newspaper article regarding PMJDY last week to you people? If not, I will give it this Friday. So Pradhana Mantri Janadhan Yojana is one of the very important initiatives of Government of India to promote financial inclusion. What is the basic idea of PMJDY? You do not have to have any balance in your bank account. Zero balance accounts are allowed. Zero balance accounts are allowed. Zero balance account. What do you mean by zero balance? I can have 0 rupee in the form of balance in my bank account. This is called as a zero balance account. And please understand, under Pradhan Mantri Jan Dhan Yojana, all you require to open a PMJDY account is Aadhaar. All you need to have is simply Aadhaar. No other document is required. Only Aadhaar is required. So tell me now, you do not have to have a zero, any amount of money, right? Even if 0 rupees is there, that is acceptable. No penalties will be imposed. No requirement of a photo ID, no requirement of a, right, residential proof. All you require is only Aadhaar. Don't you think Pradhan Mantri Jan Dhan Yojana, through this, poor people can open the bank account very easily? Correct? Poor people can open the bank account very, very easily. Because I hope you understand this. Generally, one of the issues regarding the bank account opening is lot of documentation work is required. Lot of documentation work is there. If you have opened your own bank account, you will accept this argument. Let me know how many of you have opened your bank account by going to the bank. I hope you understand. How many of you have opened your own bank account by going to the bank, not by them coming to you? Right? If you have gone to the bank to open your own account, tell me, did you face all of these issues? That is, you will go to the manager will make you wait for some time, then they will give you a long application, 4 to 5 pages will be there, right? So you'll have to fill up application, you will right give the application, then the manager says, right, you have missed this column, this column, this column, right, please fill it up again. So again you will fill it, then he will see, right, then he will ask you where is, or she will ask you where is your photo ID, where is your address proof. You will provide both photo ID as well as address proof. They will look at both of them and say both are not clear, get photocopies again, get more clear photocopies, xerox, get a clear xerox. Now you will run again, go get a clear xerox. Now they will hold both the documents in front of them and they'll simply say there's a slight difference in the name in the one document to another document, right? From one document to another document, there's a slight difference in the name. For example, right? Trust me, this happens. I worked as a manager. Trust me, all of this will happen. For example, my name is Sham S. Kagod. My name is Sham S. Kagod. So let's say in one document it says Sham S. Kagod, and in another document it will simply say Sham SK. Right? I know it is Kagod. You know it is Kagod. The issuer of the document knows it is Kagod. But the manager will simply say, how do I know this K is Kagod? Tell me, how do I know? I don't know because I don't know you. So there is a difference in the name in both of the document. So get me one more document where both the names are same. So again you will run. You'll bring all the document. Then finally the manager says you will have to keep a minimum 1,000 rupee in your bank account. Correct? In case of public sector bank, it will be 1,000. In case of private sector bank, it will be 10,000, 20,000. Right? So you'll have to keep minimum 1,000 rupee in your bank account. Otherwise, we will make deductions. Penalties will be imposed. Right? So I hope you understand. For poor people, this is cumbersome process. Very difficult, a tidy process. Right? That is the reason government has introduced a scheme by the name of Pradhan Mantri Janadhan Yojana, wherein you do not have to have any balance, no document. If you have Aadhaar, you can open the bank account. Can I say Pradhan Mantri Janadhan Yojana is a type of a financial inclusion scheme? Let me add one more here itself. The concept of a bank sathi or banking correspondent. The concept of a bank sathi or banking correspondent. Banking correspondent. Now, what is this idea of a bank sathi or banking correspondent? This was introduced by Reserve Bank of India post 2006 in India. Okay, post 2006. What is the idea of a bank sathi? Imagine here is a city, and around the city, lot of villages are there. Okay, lot of villages. Now, point number one: how many of you are under the impression that banks will open branches in every village? Think of it. How many of you are under the impression that the banks will open branches in every village? No, they will not do that. Right? Imagine there is a bank here, but the customers of the bank are present in all of these villages. So it doesn't make any sense for them to open branches in every village because cost of operation will be very, very high. So what they will do now is, imagine in this village, they will appoint a person. It could be payment bank. Please remember, payment banks operate as banking correspondents in India. It could be a payment bank. It could be a representative of the village, anybody. So they will appoint this person as a bank sathi. They will appoint this person as a banking correspondent or a bank sathi. What is the role of a bank sathi? The role of the bank sathi is they will provide a basic banking services. They will provide a basic banking services. What do you mean by basic banking services? Deposit of money, withdrawal of money, deposit of money, withdrawal of money, loan application, account application, that is account opening form, etc. So some of these basic banking services, basic. For example, imagine you are a beneficiary under LPG scheme. Right? Last week, have you read about this article? LPG subsidy. Right? There's a scheme by Government of India, DBT LPG, direct benefit transfer in LPG. Don't worry, we'll discuss DBT LPG under subsidies. Don't worry. That will happen after 1 or 2 weeks. So imagine you're supposed to receive subsidy under DBT LPG. You're supposed to receive pension into your bank account. You're supposed to receive scholarship in your bank account, or your Mandrega worker wages have been deposited into your bank account. Now, rather than going to the bank, you can simply approach this bank Sati and withdraw this money. Withdraw this amount of money. But for having provided these kind of services, the bank Satis will impose certain charges and collect certain charges from you. So now can I simply say, based on this, bank Sati or business correspondent model is a type of financial inclusion initiative? Let me know. It is a type of a financial inclusion initiative. Right? So what is the idea of a financial inclusion? Providing financial services in a cost effective manner for right the poor people, targeting poor people. That is called as financial inclusion. Now, next important point, both of these, that is a payment bank as well as a small finance bank, will also promote financial inclusion. That is the reason why Reserve Bank of India is promoting the model of payment as well as small finance bank. How? How small finance bank and payment bank will promote financial inclusion? Let's try and understand. Point number one, it will basically help in mobilizing the deposits from rural customers. It will help in collection of deposits. Wherever SFBs are present, these are just like any bank. People will deposit their money into the bank account. So it will help in mobilization of the deposit. And once they collect a deposit, they can use this money for providing loans to customers. But look at the loans here. Loan component is very important. Why? The PSL criteria. I'll come back to this. The PSL criteria for small finance bank. The PSL criteria, priority sector lending. Do you remember this? The priority sector lending criteria for small finance bank is 75%. That is 75% of the loans which are issued by the small finance bank will have to go to PSL or PSL categories only. For example, we have agriculture sector, export credit, education loans, right? We have a housing credit, we have startups, we have renewable energy projects, we have weaker sections of the society, etc. So 75% is the criteria, that is a PSL criteria for small finance bank. Now, please tell me, if a small finance banks will provide more loans to agriculture sector, is it not a type of financial inclusion? Very simple question to all of you. If small finance banks will provide more loans to agriculture sector, is it not promotion of financial inclusion? That is, agriculture sector generally finds it very difficult to get institutional loans. We are providing institutional loans. So supply of credit to small and small business units, small and marginal farmers, micro and small industries, etc., etc. Minimum equity paid up capital is 200 crore rupees. Some of the books have written this as 100 crore. Initially it was 100 crore. Now it has been made 200 crore rupees. Minimum equity paid up capital is 200 crore, and foreign investment is allowed within small finance bank. Up to 74% of investment in the SFB, you can bring it from the foreign market. Okay. So these are some of the features. Now, what are the important right functions of small finance bank? It will accept a bank, accept a deposit. It will provide loans to unserved as well as underserved sections of the society. It will provide loans to unserved, that is the sections where loans are not provided, or underserved, sufficient loans are not provided, sections of the society. For example, small business units, smaller manufacturing units, small and marginal farmers. What do you mean by small and marginal farmers? Please remember this. Whenever you have a classification of farmers, whenever you talk about classification of farmers, we will classify them into marginal farmers, small farmers, medium farmers, and large farmers. Medium farmers and large farmers. Marginal, small, medium, and large. And please remember this. Marginal means the farmer who is cultivating on a piece of land up to 1 hectare. Up to 1 hectare, right? The cultivation is being done on a piece of land up to 1 hectare. Small means more than 1 hectare, but up to 2 hectare. More than 1 hectare up to 2 hectare. Medium means more than 2 hectares up to 10 hectares. And large means more than 10 hectares. Right? 10 plus hectares. Any difficulty in the classification, please do let me know. Farmers, and please remember this. Please remember, very often you will come across these classifications. Right? Very often, whenever you talk about agriculture sector, you will come across this classification. Marginal means you are cultivating on a piece of land up to 1 hectare. Small means more than 1 hectare up to 2 hectare. Medium means more than 2 hectares up to 10 hectares. And large means more than 10 hectares. More than 10 hectares. Now, some of the students will start correcting me. Sir, right, my book says not 1 hectare, but they say 2.5 acres. In the book, they're not using 1 hectare, but they're saying 2.5 acres. So you are wrong. My dear, please understand, 1 hectare is equal to 2.5 acres. Very simple. 1 hectare is equal to 2.5 acres. So they can give you in terms of hectares or they can give you in terms of acres. Please don't worry. Right? Conversion is simple. 1 hectare is equal to 2.5 acres. Done? So the objective of SFB will be to provide loans for small and marginal farmer, right? Small manufacturing units, business units, micro and small industries. Now, please understand there's a classification called as MSME. There is a classification called as MSME. What is MSME? Micro, small, and medium enterprises. Micro, small, and medium enterprises. Now, in later part of the classes, we'll have a detailed discussion about MSME. And when I'm discussing MSME, I will tell you what is the problem to get credit for MSME, what government of India is doing to promote access to credit for MSME, etc. So you please do not worry. Please do not worry about MSME as of now, but please remember MSME, right? MSME means micro, small, medium enterprises and unorganized sector entities. So the target for small finance banks is to lend more and more loans for these sections. So what are the prudential requirements? What are the mandatory requirements they will have to follow? One, they will have to maintain CRR, they will have to maintain SLR as decided by RBI for scheduled commercial banks. Extend 75% of the loans under PSL criteria. And point number three is at least 50% of the loans that they provide should be of a value up to 25 lakh rupees. I'll repeat the statement. Up to 50%, I'm sorry, at least, not up to, at least 50%, that is at least half of the loans that these banks will issue should be valued up to 25 lakh rupees. What is the reason? What is the context here? If a value of the loan is up to 25 lakh rupees and half of the loans are up to 25 lakh rupees, don't you think they'll be able to provide loans to large number of borrowers in the market? Please do let me know. If they are giving more than half of the loan and the value of the loan is up to 25 lakh rupees, can I say they'll be able to give more number of loans to borrowers in the market? That is the only reason. That is the only reason. Otherwise, if you want to meet PSL, right? If you want to meet the target of PSL, you can give large value loan to rich farmers. You can easily meet it. But the argument is not giving large value loans. Argument is give loans which are up to 25 lakh to each of the borrower up to 25 lakh. But these loans must be half of the loans that you give, which means you will have to give more and more loans. Right? So these are the prudential requirements, prudential norms which are applicable to small finance banks. Okay. Next one is the concept of payment banks. Idea of payment banks. Okay. Sir, how isn't 25 lakhs is a large amount for small farmers? Let me give a very simple example. You want to purchase a tractor. How much loans will you take? You want to purchase, right, let's say loan, sorry, another land. How much loan will you take from the bank? Let me give a very basic idea. Imagine there is an SFB which is giving a loan of 200 crore rupees this year. Okay, this year they are providing total loans worth 200 crore. And within 200 crore, if you apply PSL target of 75%, can I say it will basically become 150 crore rupees? Correct? It will become basically 150 crore. Now, I'll give you two examples. Please tell me what makes more sense for you in the context of a small finance bank. 150 crore rupee, right? That will be given to 15 farmers. 15 farmers. Again, hypothetical example. Don't tell me, sir, right? Which farmer you tell me, right? Is it okay if I give 10 crore rupee to each of the 15 farmers? Example 1. And example 2, RBI says, right, at least half of the loans that you provide, at least half of the loans that you provide should not be more than 25 lakh rupees. At least half of the loans that you provide should not be more than 25 lakh rupees. Please tell me in example 2, will you not be able to give loans to more number of farmers? Very simple question, right? Will you not be able to provide more number of loans under example 2, and still you'll be able to meet the PSL criteria? Even then, you'll be able to meet PSL criteria, right? That is the reason RBI says, and please understand, banks can do this. Bank can simply choose example 1 if there are no conditions like this. If there are no conditions, banks can simply choose to go with example 1. Then you're not promoting financial inclusion. You're not promoting financial inclusion. So basically, by ensuring at least half of the loans will not cross more than 25 lakh. And when I say not cross more than 25 lakh, it could be 10 lakh, it could be 8 lakh, it could be 20 lakh, it could be 1 lakh also. So at least half of the loans should not be crossing more than 25 lakh rupees. That is the argument that has been put forward by Reserve Bank of India. Okay, done? Are Basel norms applicable? Of course, yes. Any scheduled commercial bank. I hope you understand. Any scheduled commercial bank, Basel norms will become applicable by default. So payment banks. Point number 1. Payment banks will have to have a minimum equity paid up capital of 100 crore. In case of SFB, it is 200 crore. Now it is 100 crore rupee. Second, foreign investments up to 74% will be allowed within payment banks. Foreign investments. Okay. Third one, what are the capital requirements? Point number 1, they will have to maintain a minimum capital adequacy ratio of 15% of risk-weighted assets. Please tell me, do you remember capital adequacy ratio? Let me check. Do you people remember capital adequacy ratio, CAR? Sir, if you ask me, sir, when have you discussed it? My dear, last week. Last week we discussed Basel guidelines, and in that we discussed a capital adequacy ratio. And I'd asked a very simple question to you people at the point itself. I asked you, do you think should all the banks have the same capital adequacy ratio? And your answer was correct. No, sir. Capital adequacy ratio should be different for different banks. So in the context of payment banks, the capital adequacy ratio is 15%, minimum 15% of RWA. Point number 2, out of the capital that the bank has, don't you think the tier 1 capital has a more absorption capacity compared to tier 2 capital? Do you remember this also? The tier 1 capital can absorb the losses much more easily, can comfortably absorb the losses compared to tier 2 capital. And look at the second one now. Tier 1 capital should be at least 7.5% of RWA. Right? The tier 1 capital should be at least 7.5% of risk-weighted asset. And the second one, tier 2 capital should be limited to a maximum of 100% of total tier 1 capital. Right? Maximum tier 2 capital that you are allowed to hold is 100% of total of tier 1 capital. What is the meaning of it? Let me give a very simple example. Instead of 15%, have a look at this. Instead of 15%, what if a payment bank has a capital adequacy ratio of 18%? Think of it. Can it happen? Of course, yes. Possibility is there. So instead of 15%, what if a payment bank has a capital adequacy ratio of 18%? And the condition says tier 1 capital should be at least 7.5%. In that case, is this a possibility? Please do let me know. Is this a possibility? Tier 1, tier 2, 8% and 10%. Let me know. Is this a possibility? Of course, yes, it can be a possibility. But Government of India through RBI says no. Right? Do not have more of tier 2 capital. Please have more of tier 1 capital. Argument is simple. Do not have more of tier 1, sorry, tier 2. Have more of tier 1 because tier 1 can absorb the losses much more easily, much sooner compared to tier 2 capital. That is the reason. Look at the third condition now. The tier 2 capital should be limited to a maximum of 100% of total tier 1 capital, which means if capital adequacy ratio for a payment bank is 18%, tier 1 has to be 9% minimum and tier 2 has to be 9%. It has to be like this. It cannot be 8 and 10. It cannot be 8.5 and 9.5. All these combinations are not possible, right? This has to be the starting point. Right, sir? Is this the only combination possible? Of course, no. Can I give you one more combination? Right, that is, right, have a look at this. Can we have a 10% and 8%? I hope you understand. Can we have 10 and 8? Of course, yes. So we are meeting, right, all the three conditions here. All the three conditions. And the reason is very simple. Those students who are asking, sir, why? Why should we have more of a tier 1 compared to tier 2? Reason is very simple, my dear. Tier 1 capital can absorb the losses much more easily compared to tier 2 capital. And that is the reason, please revise the Basel guidelines. It says tier 1, right, should be more compared to tier 2. Right, that is the reason these are the capital requirements. Come to the functions of payment bank. Functions. It cannot undertake lending activities. Please remember this. And this is the biggest problem for a payment bank. It cannot undertake lending activities. Payment banks are not allowed to lend in the market. Now, please tell me, if they're not allowed to lend, are they allowed to issue credit cards? Let me check. If they're not allowed to lend in the market, will they be allowed to issue credit cards? What is a credit card? Some of you are saying yes. What is a credit card? Credit card is nothing but a loan. I hope you understand. Credit card is nothing but a loan given to you, advance money given to you. Right? So that is the reason credit cards also will not be issued by the payment bank. Second, they are allowed to collect deposits. They are allowed to collect deposits, but there is a condition there also. What is the condition? Per customer. I repeat, per customer, they are not allowed to collect more than 2 lakh rupees from a customer. Please remember, from each of the customer, they are not allowed to collect more than 2 lakh rupees. Earlier, it was 1 lakh rupees. If a book says 1 lakh rupees, update it. Now it is a 2 lakh rupees. Payment banks are allowed to collect deposits, but not more than not more than 2 lakh rupees now. Earlier, it was 1 lakh. Third one, they will have to maintain cash reserve ratio. They will have to maintain a cash reserve ratio, CRR. They will have to maintain CRR as defined, as dictated by Reserve Bank of India. And finally, have a look at this. Out of the total deposits that they have collected, at least 75% they will have to invest this in government securities. Out of the total deposits that they have collected, at least 75% they will have to invest in government securities. Right? They will have to invest in government securities because they are not allowed to give loan. They will have to invest in government securities. Now, many of you will ask me, sir, why? Why in government securities? Please think of it. Think of it. Payment bank, they are not allowed to give loans. So what should they do? Taking the deposits. I hope you understand. And in fact, I've told you already, right? The feature that they are not allowed to give loans, this is the biggest problem for payment banks. This is the biggest problem. I'll come to that. So because they are allowed to collect a deposit, but they are not allowed to lend in the market, at least 75% they will have to invest in government securities, and remaining amount of money they will have to keep with other banks in the form of deposits. They will have to keep with other banks. Right? So that is basically the concept of payment banks. Right? Any issue here? Any issue? What is a treasury bill? My dear, you people tell me, what is a treasury bill? Are Baba, you people tell me, what is a treasury bill? Did we not discuss treasury bill? Right? Already forgotten what is treasury bill. Government securities are of two types. So one is dated security and the other one is a treasury bill. Right? In case of treasury bill, maturity period is up to 1 year. In case of dated securities, maturity period is more than 1 year. These are government bonds. These are right treasury bills. Can we go forward now? Now, what is the issue here? Please understand the logic here. When RBI proposed the model of payment bank, when RBI proposed the model of a payment bank, there were 12 companies, 12 right people, companies in simple terms, applicants who were interested in payment banks. There were 12 entities who were interested in the payment bank. But over a period of time, what has happened? They have looked at the model of the payment bank. They realized that, okay, payment bank is not allowed to give loans. Point number one, payment bank is not allowed to give loans. Then what is the use of collecting deposit and investing in government securities? Don't you think profitability will be very limited here? Think of it. Profitability will be very much limited in the concept of a payment bank. And point number two, you are collecting deposit. You are collecting deposit. Don't you think you are competing with State Bank of India in collection of deposit? You are competing with Punjab National Bank. You are competing with Bank of Baroda. So you are competing with other scheduled commercial banks to collect a deposit. Right? Don't you think there also you will face a lot of stiff competition? You'll also face a lot of competition with other banks, scheduled commercial banks in collection of deposits. So on one side, in collection of deposit, you have a competition. On the other side, you are not allowed to give loan. So from where you are allowed to earn money? Where can you earn money? You are allowed to invest in government securities, generate returns there. You have right remaining deposits, keep it with other banks, earn interest there. Right, provide bank sati services, earn certain charges there. Provide remittance services. Remittance simply means a transfer of money. Provide remittance services, transfer of money. Provide remittance services, earn certain money there. So the scope of earning profits, is very, very limited in payment banks. And that's the reason many of these 12 applicants who had received the licenses, they went to RBI, they gave the license back to RBI. They said, no, we will not be able to operate. And many others started operating payment bank. And after the operation of payment bank, they realized, okay, now we are not able to earn money on this model. Some of them already have closed down and some of them have returned their licenses. The best example is, have you heard of Aditya Birla Company? Birla Company, please do let me know. Have you heard of Birla Company? They started a payment bank. They started a payment bank. And couple of years ago, they said, not profitable for us. Not profitable for us. Right? So what we will do is, we'll simply, right, close the payment bank. Right? We'll simply close the payment bank. Okay, so that is the reason very few of these payment banks are actually operational and making profits. So any example of a payment bank? You have Paytm payment bank, right? You have India Post payment bank. You have Airtel payment bank. So different types of payment banks are operating in India, operational, but very few of them are actually providing very good services along with making profits. Okay, can we go forward? Can we go forward? Let me know. Any problem with what I've discussed? Okay, so these are the different types. These are the different types of banking units in India, and this is the end of the banking chapter for you. Let me add to certain concepts in the form of committees. Right, a certain concepts of committees. Paid up capital means how much money will be contributed by shareholders. My dear you people, some of you are not revising. Some of you are not revising. That becomes a problem. Trust me, that becomes a problem. Please tell me, did we discuss the idea of a paid up capital last week? Yes or no? Please revise. If you do not revise, then everything will become new for you. Did we not discuss the idea of a paid up capital? That is how much money is invested by, right, the owners. How much money is contributed for starting a company by the owners. That is called as paid up capital. Right? Paytm provides loans. My dear, it is not Paytm Payment Bank. Please check. Paytm Payment Bank does not provide loans. There are different units within the Paytm. I hope you understand. Paytm, the parent company of Paytm is 197. I get this question in every classroom. The Paytm Payment Bank, it is part of a larger company by the name of 197. They have different businesses. They have different businesses. One of them is Paytm Payment Bank. Payment banks are not allowed to give loans. If a payment bank gives a loan, please tell me, both of us will write a mail to Reserve Bank of India. Okay. Tier 1 and Tier 2. I'll repeat it again. Tier 1 capital, Tier 2 capital are part of total capital of a bank. Tier 1 can absorb the losses much more easily compared to Tier 2 capital. And that is the precise reason. That is the precise reason RBI always tells the banks to have more of a Tier 1 capital compared to Tier 2 capital. That's it. Please remember that. Okay. Okay. Can we go forward now? Please revise. If you do not revise, then everything will become difficult. Please keep on revising. Next, Narsimham Committee recommendations. Narsimham Committee recommendations. Now, what is the idea for Narsimham Committee recommendations? Please understand. In 1991, Government of India set up a committee to review the banking sector and give recommendations. There were two committees set up, one in 1991, second one in 1998. One in 1991, second one in 1998. Both were headed by Mr. Narsimham. Both were headed by Mr. Narsimham. And that is the reason, right? These are referred to as Narsimham 1 committee and Narsimham 2 committee. Instead of Narsimham 1 and Narsimham 2, they will also use the term Committee on Financial System. Committee on Financial System. Committee on Financial System, right? That is a CFS. So instead of saying Narsimham 1 and Narsimham 2, they could also say CFS 1 and CFS 2. All of them are one and the same. Do not be confused. Now let's start. What is the recommendation of Narsimham 1 committee? There should not be any branch licensing policy. What is this, a branch licensing policy? Even today we have it. Imagine you want to open up 100 branches today in India. You're a bank, you want to open up 100 branches in India. You will have to take a licensing from Reserve Bank of India. You'll have to take a licensing from Reserve Bank of India. And Reserve Bank of India, please understand, right? And the Reserve Bank of India will dictate how many branches you will have to open in urban India and how many branches you will have to open in rural India. Please remember this point. I'll repeat it. Reserve Bank of India will tell you how many branches you will have to open in urban India, how many in rural India. Now, please tell me, can I say this policy of RBI will promote financial inclusion? Let me see. Is this policy of RBI, is it promoting financial inclusion? Please do let me know. That is, if RBI will tell you, 25% of branches please open in villages, remaining 75% you can open anywhere in cities. Don't you think through this RBI is pushing banking services towards the rural part of India? So answer is yes. Answer is simply yes. So right, understand this. You require licensing from RBI. But this committee, Narsimham committee, says we should not continue that. We should discontinue it. We should not have such a policy. What is the reason? If you are operating a bank, don't you think the bank should have the right to decide where they want to open the branches? Let me know. If you are owning a bank, don't you think it should be your decision to open the branches wherever you want? But here, RBI is dictating terms. RBI is telling you, you must open 25% in rural parts of India. So committee says, no, we should discontinue this policy. Second one, do not go for nationalization. We already have so many nationalized banks now. Do not go for nationalization. Rather than this, go for allowing private sector banks to operate in India. Allow foreign banks to come into India. Give more licenses so that private sector banks can be set up. And the argument was very simple: promotion of competition. This will lead to higher competition. Third one, PSL should be brought down to 10%. PSL should be brought down to 10%. Right? Did we do that? Think of it. Did we reduce the PSL to 10%? No, even today PSL is 40% generally. For some of the banks, it is 75%. For regional rural banks, it is 75%. Right? For cooperative, urban cooperative banks, it is higher. For small finance banks, it is higher. So RBI has not reduced it. It is still, right, 40% itself. Reduce SLR and CRR. Reduce SLR and CRR. SLR and CRR, please understand, earlier both SLR and CRR put together, many of the times were more than 50%. It was more than 60%. So if you have a very high SLR and CRR, don't you think a lot of the deposits collected by the banks will get stuck up in the form of SLR and CRR? Let me know. Right, this idea of SLR and CRR, don't you think a lot of this money will get stuck up in the form of the deposits collected by the bank? So what this committee recommended was reduce SLR and CRR, and we have done this. We have in fact done this. Right, today if you look at the newspapers, SLR is around 18%. Do not buy heart it, because it is very dynamic, it will keep on changing. And CRR, it is 4%, right? 4%. Generally, CRR will be fixed in the range of 3% to 15%. It will be fixed in the range of 3% to 15%. Go for computerization in the banking sector, right? We have implemented this, by the way. Go for computerization in the banking sector. That is, if you have visited a bank branch, have you seen, right, the officers using computers to provide transactions to you? Or have you seen, right, the officers using a very big ledger books? Right, please do let me know. If you have gone to a bank, are they using computers, right, in processing loan, in acceptance of the deposits, in right, allowing you to open a bank account, etc., etc. Right, so they are using computers now. Much more efficient, much more efficient. Computerization has already been done. We will have to set up a debt recovery tribunals. We have already set up DRTs. Do you remember this? We already have set up debt recovery tribunals in India. At post 1993, we have set up debt recovery tribunals. Next, we will have to set up asset reconstruction companies. Right? Do we have asset reconstruction companies in India? Answer is yes. We have discussed all of this. Right? Don't act surprised. Don't say, sir, what is ARC? We have never come across ARC earlier. Private sector entry should be allowed. Rather than going for nationalization, allow private sector. It will promote competition. Banks should be allowed to raise the capital by issuing the shares in the market. We are doing this now. We are actually doing this, right? Have you seen various banks are going to the market, issuing shares and raising capital from the market? Yes, we are allowing this. This is already implemented. We should have a four-tier structure in the banking sector. At the top level, we should have 3 to 4 very big banks, very, very large banks at the top level, 8 to 10 national banks below, right, the large banks. Around some of these banks will be local in the sense a very limited region they'll be covering, local banks, and village level banks, which will be referred to as rural banks. A 4-level structure of a banking should be implemented in India, right? So again, understand this. We have nationalized banks now. We have large banks also. We have local banks also. We have regional rural banks also. Okay. So this is a 4-tier structure or 4-level structure, which was recommended by Narsimham Committee 1. Now next, Narsimham Committee 2, 1998. Narsimham Committee 2, 1998. Point number 1, we should set up credit information bureaus. We should set up credit information bureau. What is this idea of a credit information bureau? Please tell me, have you come across CIBIL score? Let me know. Have you people come across a term called as CIBIL score? I'm pretty sure some of you have already got the CIBIL score as well. What is this CIBIL? CIBIL is nothing but Credit Information Bureau of India Limited. Very simple. CIBIL stands for Credit Information Bureau of India Limited. CIBIL score is basically, as a borrower, it represents as a borrower, have you borrowed money and have you repaid the money promptly? Right? It's a credit rating for individuals. What do you mean by credit rating? You as a borrower, how have you behaved in the past? Have you taken the loans? If yes, have you repaid the loans on time? Or have you taken the loans? Did you default? Did you delay the payment? So the argument is simple. Individuals, you, me, right, your neighbor, your friends, everybody will be given a score which is called as a CIBIL score. And the recommendation to have authority for giving a CIBIL score was given by Narsimham committee. Okay. Second, we should have merger of these strong banks. Strong banks means which have a very good asset quality, which have lower NPS, etc. We should basically merge this, create a much larger bank which will be able to provide large value loans for infrastructure, different customers, that is industries will be their customers, etc. So merger of strong banks to create a much larger bank. Weak banks should be asked to conduct a narrow banking. Weak banks should be asked to conduct a narrow banking. What do you mean by this? If a weak bank is there, what do you mean by weak bank? Simple. Where the NPS are very, very high. Where NPS are very high, capital adequacy ratio is very low, right? Deposit mobilization is taking a hit. These are generally called as weaker banks. Now, if a bank already has incurred a very high amount of losses and also has a very high NPAs, should we allow the bank to provide loans in the future? That is in the coming year. Should we keep on allowing this bank to provide loans? Answer is no. Why? The NPAs are very high already. The losses are also very high. What is the guarantee that if they give new loans, they'll be able to recollect it? What if NPS further will increase? Losses will increase to the extent that they will close now. So that is the precise reason, right? Weaker banks should be asked to conduct narrow banking. Narrow banking means what? They have collected deposits, ask them to use the deposits and invest in government securities. Right? Ask them to invest in government securities. Right? Ask them to invest in government securities. So automatically, right, the investment, right, the kind of investments or where they are allowed to use this money will be narrowed down. Narrow banking means very few functions will be provided to them. This was called as a narrow banking. Weaker banks should be asked to conduct a narrow banking, means use the deposits, not to give loans, invest in government securities. Greater autonomy should be given to the bank board. Right now, many of these banks, right, the decision making is influenced. I'll not say done, it is influenced by Government of India. That is public sector banks. Please tell me, all of you will agree, public sector banks, more than 51% ownership is there with Government of India. That is the reason these are called as public sector banks. Right, more than 51% is there with Government of India. So if Government of India owns more than 51%, don't you think government will try to influence the decision making in these public sector banks? Of course, yes. Of course, yes. Government has majority ownership. In fact, within Ministry of Finance, there is a department for financial services. DFS, Department of Financial Services. The banking sector will come under the Department of Financial Services, and many of the times the directives for policies will come from Department of Financial Services itself. So argument is simple. Government should not be intervening. More autonomy, more power should be given to the board of the bank. Let them keep on making decisions. And finally, regulator should not be the owner of the bank. What do you mean by regulator should not be the owner? All of you will agree if I say RBI is a regulator of banking sector, but RBI is owned by Government of India. RBI is owned by Government of India. So on one side, government through RBI is a regulating banking sector. On the other side, government is a owner of public sector bank. Don't you think a slight conflict of interest here? Think of it. On one side, government through RBI is a regulating banking sector. On the other side, government of India is a owner of public sector bank. Owner is also a regulator. Any problem here? Owner is also a regulator, right? There is a issue here, right? Both cannot be the same. So owner should not be the regulator. What was basically proposed was government of India should not be having the ownership directly with them. They can appoint, they can set up one more authority where they can transfer the ownership to the authority. Right? Government is the owner, government is also the regulator. That is a conflict. That is a conflict. So government should not be directly owning public sector banks. So that was the recommendation of Narsimham committee. Done. So these are some of the recommendation. Now please understand, many of you are trying to do a PhD on all of these recommendations. Not useful for UPSC. Do not use, do not read everything in detail. Not at all required for UPSC. Why? Narsimham committee recommendation document is around 500 pages. Now you tell me, think rationally and tell me, do you need to read all the 500 pages? If you want, I can give it to you. Nothing big in that. You will get it in Google only, right? It's not a secret document. You will get it in Google only. So do you think you should read all the 500 pages? Not at all needed. Do not waste your time. Simply by heart the recommendations, go forward. In fact, if you have seen last 5 years, UPSC has not asked a single question on a Narsimham committee. They have not asked. Okay. Now, last concept within this chapter of banking, but not related to banking, there is a concept called as NBFC. There is the idea called as non-banking financial companies. Non-banking financial companies. NBFC stands for non-banking financial companies. Now, what do you mean by non-banking financial companies? Right? Let me explain it to you. I'll give a very simple statement. That's a definition. I would recommend that do not by heart the technical definition of NBFC, because if you check RBI website, RBI has given a very nice definition for NBFC, but that is not a definition. That is in fact a one-page definition, one-page paragraph they have given. Do not worry, do not read that, do not by heart that definition. What I would simply recommend is, please remember this definition. What is an NBFC? NBFCs are financial institutions which will provide banking services but without meeting any legal definition of the bank. These are the financial institutions which will provide the financial services but without meeting the legal definition of the bank. Now you will ask me, sir, what do you mean by that? Let me simplify it. Understand this very carefully. Let me simplify this. On one side, I will write bank. On the other side, I will write NBFC. I'll make a comparison. I'll make a comparison between both bank as well as NBFC. Point number one, banks are generally registered under Banking Regulation Act of 1949. Banking Regulation Act of 1949. Correct? Right? Yes or no? Please go back to earlier slide. Banks are registered under Banking Regulation Act of 1949. What about NBFCs? These are registered under Companies Act. These are registered under the Companies Act. Companies Act of what? Companies Act of 2013. Some of the books will write it as Companies Act of 1956, but 1956 we are not using. Now we are using Companies Act of 2013. Point number two, banks are allowed to collect demand deposits as well as time deposits. The banks are allowed to collect demand deposits as well as time deposits. NBFCs, right? Some of them, not all of them. NBFCs, if they are allowed to collect deposits, they are allowed to collect only time deposits. They are allowed to collect only time deposit. And that too, please remember this. NBFC's time deposits will have to be in the range of 12 months to 60 months. Minimum 12 months, maximum 60 months. That's it. NBFCs are allowed, if they are allowed to collect deposits, it is a time deposit. It is 12 months to 60 months. Point number three. Point number three. If you keep a deposit in a bank, there is insurance for the deposits. Insurance, deposits are insured. Whereas in case of NBFC, there is no deposit insurance. There is no deposit insurance. There is no deposit insurance. Okay. Point number four. Right. And if you ask me, sir, why no deposit insurance, please tell me. Is NBFC a bank? Let me know. Is NBFC a bank? NBFC is not a bank. Look at the name itself. Please look at the name. Some of you are saying yes. My dear, what is there in the name? This is interesting. What is there in the name? NBFC, right? Non-bank. The name itself says non-bank. And my question is, right, it is not a bank. Right? So if I ask you, is it a bank? Say no, because the name itself says it is not a bank. Non-bank. And some of you are asking, sir, what is any example of NBFCs? Have you heard of Muthoot Finance? Let me know. Muthoot Finance, Manappuram Gold. And any ads that you're seeing, any ads you're seeing in the newspaper where they'll say within 60 minutes they will give you loan, right? P2P, right? A to A's, account aggregators, right? P2P lenders. Lot of these are basically NBFCs. Lot of these are basically NBFCs, right? But sir, not all the banks are allowed to take deposits. Are Baba, right? I'm not talking about development banks. I'm talking about commercial banks. I'm talking about commercial banks. Okay. So fourth point, the banks are part of payment and settlement system. The banks are part of payment and settlement system. What do you mean banks are part of payment and settlement system? Very simple. Have you heard of NEFT? And in the classroom, sometimes I'm actually surprised. I'll tell you why. Have you heard of NEFT? Have you heard of RTGS? Have you heard of IMPS? NEFT, National Electronic Fund Transfer, RTGS, real-time gross settlement, immediate payment settlement, IMPS, right? These are very, very famous modes of transfer of funds in India. Very, very famous modes of transfer. I said sometimes I'm surprised in the classroom because some of the students would not even have heard of NEFT. How is that possible? Are you not using mobile banking? Right? I'm asking to the youth of India, right? Where the government of India says we want to promote digital India. Are you not using mobile banking? Right? When you're using mobile banking, are you not transferring funds from your account to somebody else's account? Whatever the amount is, I'm not focused on the amount. Are you not, right, using the transfer of funds services? And if you're using the transfer of fund services, you will be using either NEFT or you will be using RTGS or you will be using IMPS. Just make observations, you'll understand it. So banks are part of payment settlement system, which is nothing but, right, it is a system which is used for transfer of funds such as RTGS, NEFT, etc. NBFCs are not a part. NBFCs are not a part of a payment and settlement system. And point number fifth, banks are allowed to issue checks. Banks are allowed to issue checks, right? Issue the checks on their names. NBFCs are not allowed to issue checks on their names. Right? They are not allowed to issue checks on their names. That is, for example, if you open a bank account, will you get a checkbook? Let me know. Will you get a checkbook? If you open an account in SBI, right, who will issue a checkbook to you? SBI. Right, if you open a account in, let's say, Bank of Baroda, who will issue the checkbook to you? Bank of Baroda. They would have written Bank of Baroda, right? A very, very, right, big letters, Bank of Baroda checkbook. So the banks are allowed to issue checks in their names, but NBFCs are not allowed to issue. So these are certain very important differences between the bank as well as NBFC. Can we go forward? Can we go forward? Second point in NBFC. NBFCs are not allowed to collect demand deposits, but they are allowed to collect time deposits. But the time deposits that they are allowed to collect should have a duration of 12 months to 60 months. right? 12 months to 60 months. That is the duration of the deposits. Third point, my dear, if you keep a deposit in a bank, you will get insurance, a DICGC, whereas NBFCs are not banks, hence there is no deposit insurance. Okay, can we go forward? Can we go forward now? Now, please have a look at it. NBFCs, many NBFCs will collect deposits. Many NBFCs will provide loans, right? Which is going to provide loans. Now, please tell me, now can I say NBFCs are nothing but financial institutions which will provide services similar to a bank, which will provide services, but without meeting the legal definition of a bank? Is it okay? I'll repeat it again. NBFCs are financial institutions which will provide services similar to the bank, collection of deposit, giving loans, right? Giving gold loans, investing in right infrastructure projects, etc. Similar to bank, but without meeting the legal definition of a bank. Can I go forward now? In some books, it is written Companies Act 29. Which book you tell me? Which book you tell me? And please, right? Please use Google, no? Please use Google. Check me if I'm wrong. There is no Companies Act of 2019. There is an amendment. There will be amendment to Companies Act in multiple years. Right now, we are using Companies Act of 2013. Okay. So next, NBFCs, please understand. NBFCs are generally divided into two types. NBFCs are generally divided into two types, right? One, basically these are called as a deposit taking NBFCs, and right, these are also referred to as a non-deposit taking NBFCs. One is a deposit taking, other one is a non-deposit taking. And those are asking, please understand, there are more than 10,000 NBFCs in India. More than 10,000 NBFCs. Do not remember the list, it is useless for you people. More than 10,000 NBFCs are there. Don't worry. For example, I said, have you seen Bajaj Finance? At least this you should have heard of it. Yes or no? Have you heard of Bajaj Finance or Reliance Capital? Reliance Capital. Have you heard of this Reliance Capital? At least current affairs now. Sir, I don't know what is Bajaj Finance, but at least Reliance Capital was there in the newspaper, right? Very, very recently, it was there in the newspaper, right? So NBFCs, multiple NBFCs are there. So it have been the NBFCs have been classified into two types: a deposit taking NBFCs and non-deposit taking NBFCs. And for regulatory ease, for having a easy regulation over NBFCs, please understand, as per the law, all of these have been brought under Reserve Bank of India. All of them have been brought under Reserve Bank of India, but RBI says they will have a very strict regulation over these deposit taking NBFCs. Regarding these non-deposit taking NBFCs, there are different regulators in the market who will take care of it. For example, we have a IRDA, Insurance Regulatory Development Authority. We have a PFRDA, Pension Fund Regulatory Development Authority. Some of these NBFCs will also come under the regulation of SEBI, Securities Exchange Board of India, etc. But all of them, all these NBFCs, right, as per the law, are under RBI. They will have to take a certificate from RBI if they want to start operating in India. So deposit taking NBFCs must be registered with the RBI, and some of these NBFCs are regulated by other agencies as well, such as IRDA, PFRDA, etc. So these are some of the very important points regarding NBFC, non-banking financial company. Now, very recently, Reserve Bank of India has introduced a new system, proposed a new system, which is called as a scale-based regulation, SBR. Scale-based regulation, that is a SBR. Now, if you want to understand what is the meaning of scale-based regulation, RBI simply says, based on various parameters such as size of the NBFC, the type of activity done by NBFC, the risk that the risk that NBFC will create if they fall, we will have different classification of NBFCs. I'll repeat it again. What do you mean by scale-based regulation? RBI says there are NBFCs. So based on the size of the NBFC, based on the kind of activity done by the NBFC, based on the risk that the NBFC will create. If the NBFC will fail, I will have different classification now. And this classification, right, basically is called as a scale-based regulation. And what is the new classification done by RBI for more regulation in case of NBFCs? There are 4 layers in this. Please understand this. There are 4 layers. I'll write it like this. In a pyramidal structure, I will write it. There are 4 layers, right? 1, 2, 3, and 4. Right? 1, 2, 3, and 4. If I write the numbers, 1, 2, 3, and 4. Right? Please understand. These will be like this. 1, 2, 3, and 4. Right? This is called as a base layer. Number 4 is called as a base layer. Right? Above that, it is called as a middle layer. And above that, it is called as the upper layer. And the top one, it is called as a top layer. Now, what is the logic? Why has RBI classified these NBFCs like this? Is there any reason behind it? RBI says the largest NBFCs, the top 10 to 25 NBFCs, largest NBFCs. Please tell me if these largest, very big NBFCs will fail, will collapse. Please tell me, will it have a larger impact on financial market or not? Very simple question to all of you. If largest NBFC, largest means in terms of asset, right? How much money is there with all of them? In terms of sizes, if these NBFCs will fail, don't you think the impact on the whole economy will be very, very high? So RBI says, I will have to identify these very large NBFCs, impose bank-like regulations on them. Remember this, right? Impose bank-like regulations on all of this. Bank-like regulation means what? Please understand this very carefully. The concern that RBI says is, NBFCs, although they will take certificate of registration from me, these do not have a very strict regulation compared to a bank. For example, in case of India, bank, they will have to classify their assets into non-performing asset after delay of 90 days payment. If you do not make a payment in 90 days, they will classify this as a non-performing asset. Whereas in case of NBFCs, if they give a loan, if you do not make a repayment, they will wait for 180 days. Think of it. In case of a bank, it is 90 days. In case of NBFC, it is 180 days. So now, at least on this point, please do let me know. Can I say regulations which are applicable on NBFC are much, much looser compared to regulations applicable on the bank? Very simple statement. Very, very simple statement. The regulations which are applicable on NBFCs are loose in sense these are not very strict compared to the bank. But RBI says NBFCs also play a very important role. Some of the NBFCs are collecting depositors' money in the form of a time deposit. Some of the NBFCs are giving loans just like a bank. So NBFCs also play a very important role in the economy. So what I will do is, I will divide them based on their size of the asset, based on their importance, whether they are taking deposits or not, etc. I will divide them into 4 groups. And largest 10 to 25 of them, the largest or the biggest 10 to 25 of them, I will impose very strict regulations, just like regulations on the banking sector. For example, sir, what do you mean by regulations on the banking sector? Look at this. In case of the banking sector, NPA classification is done after 90 days. Until very recently, in NBFC, it was done after 180 days. Now this has been changed to 90 days. Even in case of NBFC, which will provide a loan to you, if you do not make a repayment, right, now they will classify this as a non-performing asset within 90 days. I'm sorry, after 90 days. And, right, do you remember capital adequacy ratio? Tell me, in case of banking sector, do you remember capital adequacy ratio? Now, even in case of NBFCs, RBI says they will have to maintain a certain capital adequacy ratios. So argument is simple here, very simple argument. Do not complicate it. NBFCs were loosely regulated. Regulations were very much relaxed compared to banking sector. RBI says we will not allow this to happen because many of the NBFCs are failing now. I'll give you an example. Why did RBI do this? I'll give a very simple example. There was one NBFC called as IL&FS, very infamous now. There is, in fact, even today it is operating. Earlier, there was one NBFC in India called as IL&FS, one of the largest NBFCs in India. One of the largest NBFCs. One fine day, have a look at this. One fine day, IL&FS announced that they have incurred a huge amount of a loss, and the bonds that they've issued in the market, some of the bonds, they will not be able to pay the amount now. I hope you understand. Right? Some of these, they will not be able to make a payment now. So such a huge amount of NBFC, which has raised a loan from the market in the form of bond, says that they are not able to make payment. And after the investigations were done, it was realized that IL&FS, right, the regulations were not properly implemented by them. They had violated many of the provisions, etc., etc. So RBI said, let me implement more provisions. Let me bring more strict regulations on NBFC. So basically remember this, NBFCs now, as per the regulation, will be divided into 4 layers. One is called as a base layer. Most of the NBFCs will be there in the base layer. More than 9,000, right? There are more than 10,000 in India. More than 9,000 NBFCs will be present in the base layer. That is the reason, please look at the size of the base layer. At least now looking at the size of the base layer, does it make sense why we generally arrange this in a pyramidal structure? Let me know, right? I hope you understand why we arrange them in a pyramidal structure like this. Because if you see the pyramid, the largest area of a pyramid, it is there in the base. That is the reason base layer will be given right at the base of the pyramid. Above that, we have middle layer. Please look at the differences here. Right, non-deposit taking NBFCs, which will have asset size of less than 1,000 crore rupees, will be kept in the base layer. And when you move to the middle layer, all deposit taking NBFCs plus non-deposit taking NBFCs with asset size of more than 1,000 crore rupee will be kept in the middle layer. And the top 10 to 25 NBFCs, the top 10 to 25 NBFCs in terms of asset sizes, right? These will be kept in the upper layer, And right, remember the last point now. In top layer, right now, no NBFCs have been kept. I'll repeat the statement. In the top layer, that is layer number 1, no NBFCs have been kept. NBFCs have not been kept in the layer 1. Right? Why RBI says the largest 10 to 25 NBFCs already we have classified. We have kept in the upper layer. Now, even after this, if I need to implement, if I want to implement more strict guidelines, more strict regulations, I will shift them to the top layer. So right now in the top layer, no NBFCs are there. Right? The largest 10 to 25 NBFCs will be there in upper layer. The non-deposit taking NBFCs which have asset size of more than 1,000 crore plus all the deposit taking will be there in the middle layer, and non-deposit taking with asset size of less than 1,000 crore will be kept in the base layer. This is basically called as scale-based regulation. SBR, scale-based regulation. Done. This is a new concept introduced by Reserve Bank of India. Right? Just go through this once more. Okay. Now, what is the importance of NBFCs? Right? What is the importance of NBFCs, a non-banking financial company? What is the importance? Point number 1, let me know. Can I say NBFCs will promote financial inclusion? Can I say NBFCs will provide or promote a financial inclusion? Many of you ask, how, sir? How is that possible? No, I don't think so. Answer is yes, by the way. For example, there are various NBFCs which will provide gold loans. Various NBFCs will provide you housing loans. Various NBFCs will provide you vehicle loans, etc. right? Gold loans, housing loans, vehicle loans, etc. So now tell me, can I say financial inclusion will also be promoted by NBFCs? Any difficulty in this? Let me know. NBFCs will provide or will promote a financial inclusion. At least now, is it okay? Point number two, NBFCs will also provide loans to risky borrowers or unbanked borrowers in the market. What is the meaning of it? Imagine I want to take a loan from a bank. Imagine I want to take a loan from a bank, but my CIBIL score is very, very less. Let's say my CIBIL score is 200, my CIBIL score is 180 or less than 100. I will come to you, you are a bank manager. I will apply for a loan. Please tell me how many of you will be comfortable in giving a loan to me? Let me know. How many of you will be comfortable in giving a loan to me? You should never be comfortable. Why? I'm a very, very bad borrower. I do not have credit worthiness. Right? I do not have any credit worthiness, because if I have a very low credit score, it simply means I've taken loans in the past, but I've not been a very good I've not been very good in terms of repayment. I would have defaulted many of the times. I would have delayed the payment of the loans or repayment of the loans many of the times. That is the reason my credit score will be very less. Now, does it mean that I should not get loans at all? Think of next point also. Does it mean that I should not be taking any loans? I should not be getting any loans in the market? Of course, no. What I will do is, bank says, sorry, your CIBIL score is very less. I will not be able to give you loan. Now I will take the application, go to an NBFC. Go to an NBFC and I will apply for a loan with an NBFC. Now NBFC says, very well, I will give you a loan. No issues, I will give you a loan. But please understand, because it is very risky for me to give a loan to you, I will charge a higher rate of interest. Compared to a bank, a slight higher rate of interest will be provided by me. This is generally how NBFCs operate. This is generally how NBFCs, which are there in lending activity, operate. Now think of this very carefully, right? Because I'll add to one more point now. If I take a loan from NBFC and I will make the repayment on time basis. Now with this, can my credit score improve? Let me know. I will take a loan from NBFC and I'll pay higher rate of interest, but I will make payment on time basis. I will not delay. I will not default. Right? Every month I'll keep on making a repayment on timely basis. If this is my behavior, can my credit score, that is my CIBIL score, can there be improvement in the CIBIL score? Answer is yes. Answer is yes. CIBIL score will start improving, because now I am making prompt repayment. Automatically, this will be reported to the CIBIL authority. So my CIBIL score will improve. I'm not saying it will hit 850, but it will slightly improve. Now, if it improves, think of it in the future. In the future, with improved score, can I approach a bank and take a loan from a bank in the future? Let me know. I'm talking about third point now. Not now. In the future, with improved credit score, CIBIL score, can I go to a bank, apply for a loan in the future? Of course, yes. So can we say NBFCs will also help to convert unbanked borrowers become bank borrowers? So the NBFCs will provide loans to risky borrowers in the market. Third one, many of the NBFCs are specialized to lend in specific sectors. For example, there are various NBFCs which will provide only gold loans. Look at your left and right, look at your newspaper, right, or the ads in the TV, you will come across many NBFCs which will advertisement only giving gold loans to you. They'll say, you have gold, don't worry, come to us, deposit this gold, I will give you gold loans. Right? And if you have not seen, please check in YouTube. You will get many of these ads of NBFCs which will provide gold loan. In fact, have you seen the ad of Mr. Manoj Bajpayee? Mr. Manoj Bajpayee, right? The family man, Manoj Bajpayee, and the heroine from the same, right? Priyamani. They have made an ad on the NBFC only, right? The person will come to their home, right? A gold loan is given, etc. Again, just observe. Don't write this example in UPSC, not required. So many of the NBFCs are specialized to give loans to specific sectors. There are some NBFCs which will provide only gold loans. There are certain NBFCs which will provide only vehicle loans, NBFCs which will provide housing loans, etc. etc. Have been very helpful in creating demand as well as promoting capital formation. Right? If I give you a gold loan, right, or let's say, I'll take a very simple example. If you go to, let's say, Reliance store, Reliance Digital, right? If you go to Reliance Digital to purchase a mobile phone, don't you think, right, a finance guy, right? It could be Reliance Capital or whatever, Bajaj Capital, Bajaj, whatever the name is. They will come to and say, sir, you want to purchase a, right, let's say a handset, you want to purchase a mobile phone, we will provide EMI to you. Have you come across these salespeople? Let me know. Or if you have gone to Chroma, if you go to Chroma, right, which is owned by Tata Enterprises, if you go there, they will simply say, sir, 0% EMI, right? 0%, no rate of interest. We will give you EMI. You want to purchase a laptop? You want to purchase this? You want to purchase that? Or else, sir, no, I have not gone to showroom anywhere. If you go to purchase a car, if you want to purchase a car, don't you think there are various NBFCs which will provide EMI facilities to you? I hope you understand. So what are they doing? In essence, what are they doing? Just like a bank, are they not creating demand in the market? Are they not adding to capital formation? If they provide infrastructure loans, if they provide housing loans, are they not adding to capital formation? And please trust me, the scope of NBFC has increased so much now. The work of NBFC has increased so much now. In many of the shops, not just in bigger shops, in many of the shops, these kind of EMI facilities are available. Check it. Not just in bigger shops or these kind of a chain or retail chains. In many of the shops, these kind of EMI facilities is made available now. Okay, done. So next, what are the issues regarding NBFCs? What is the problem regarding NBFCs? Okay, what has been the problem in recent times? First one is they are finding it very difficult to collect funds now. Collect funds in the sense, simple question, think of it. I said NBFCs generally, right? Some of these NBFCs, those who want to lend, because I said NBFCs can be involved in lending or they can be other types of NBFCs as well. Imagine there is an NBFC which wants to provide loans in the market, which wants to provide loans in the market. Generally, what they do is they will either take a loan from a bank and provide the loans here, or they will go to the bond market. They will go to the bond market, issue bonds, collect money, and lend. Now, please tell me, during pandemic, what has happened? During pandemic, do you think NBFCs were able to collect more and more loans from the banking sector? Please do let me know. It's a very basic question. You do not have to be an expert, right? My question is, in the last 2 to 3 years, that is right from 2020 and 21, thanks to pandemic, do you think the NBFCs will be able to raise more money from the banking sector? No, banking sector itself is suffering because of pandemic. On the other side, what about the financial market? What about the bond market? There also the demand for the bonds from NBFCs was affected. So now can I simply say NBFCs has or NBFCs have found it very difficult to raise funds right in the last couple of years. And look at this. If NBFCs find it very difficult to raise funds, what about their lending activity? What about their lending activity? Don't you think their lending activity will also be affected? Point number two. Point number three, thanks to pandemic, what will happen to the non-performing assets in NBFCs? Let me know. What do you think should happen to the non-performing assets in NBFCs? NPAs in the NBFCs also has improved. Improved in the sense increased. My mistake, increased. And many of the NBFCs have incurred losses because of it. And just like a bank, if NBFCs are taking a loan from a bank and giving a loan for infrastructure development, don't you think there will also be a problem of asset liability mismatch? There will also be the problem of asset liability mismatch, which will have an impact on the functioning of non-banking financial companies. right? So these are some of the issues. These are some of the issues that NBFCs are actually facing. Done? Can we go forward now? Can we go forward? Can you please explain how increase in scope of EMIs in market is linked to NBFCs? My dear, what I'm saying is NBFCs are basically entering into tie-ups, agreements with many of the service providers in the market, wherein they are offering EMI facilities to you. I hope you understand. They are providing EMI facilities. For example, I said car. If you talk about, let's say, you want to take a loan for a car, let's say 15 years ago or 20 years ago, mainly the loans were given by banking sector. But today, there are so many NBFCs in the market. They will provide these kind of loans at a 0% rate of interest in many cases, 0% or zero commission, zero charges, etc., etc. Right? So that is the point I'm trying to make there. Okay? How NPA reduced in COVID? Who said NPA has reduced in COVID? Did I say NPA has reduced in COVID? I said NPAs have increased thanks to COVID. What is asset liability mismatch? Arey Baba, very dangerous, right? You people are like those who are asking the question. I'm telling them, you people are not revising. Tell me, in the last week, others, did we discuss asset liability mismatch? Right? Very nicely, I draw a picture of a bank collecting deposit for 2 years, giving a loan for 10 years. Very simple, Baba. What is asset liability mismatch? Asset is nothing but a loan. Asset is nothing but a loan. And a liability, right? A liability is nothing but, right, the loan that they have taken or bond that they have issued, which they will have to repay. So imagine they will take a loan from a bank for a duration of 5 years and use the money to give a loan for infrastructure construction for 10 years. So the tenure of asset is a different, tenure of loan, tenure of liability is different. That is called as asset liability mismatch. Okay. Sir, you have discussed, but it is not clear. My dear, can you understand the tenure? Tenure means what? Term. Tenure means term. For how many years the NBFC has taken a loan here? For how many years? 5 years. For how many years the loan has been given? 10 years. So don't you think the tenure of both of them is a different? That is called as asset liability mismatch. Okay. So how they earn from gold loan? Interest. Interest. Right? They will charge a lot of money on it. Okay, done. So these are certain important concepts regarding NBFC. Again, don't enter into individual NBFCs. How gold NBFCs will operate, how vehicle loans will operate, not needed. Don't worry. Don't worry. UPSC is not going to ask you about all of this. Okay, let me start the discussion. Let me go ahead now. Questions are there. We can take up the questions at the end of the session today. We can take up the questions at the end of the session. Don't worry. Okay, so these are the important concepts regarding, right, the idea of a banking sector. All the concepts are important. Please do not skip on any one of them. All the concepts are important. Please read all of them carefully. Read all of them very, very carefully. All of them are important. Now let me go to the next one. Concept of fiscal policy, where I'm going to discuss budget as well as finance commission. Okay, budget as well as finance commission. Now, what we are going to discuss in this chapter of Budget and Finance Commission, certain important points regarding budget. What is the process of budgeting? What are the accounts in the budget? FRBM and NK Singh Committee. Public debt as a concept. Public debt as a concept. Finance Commission, right? 15th Finance Commission. What are the recommendations? Let's start. What are certain important points regarding the budget? Point number one, the term budget is not mentioned in constitution. The term budget is not mentioned in constitution. The term budget is not mentioned in constitution. Please remember this. UPSC has asked a question on this once in the prelims. Please remember this. The term budget is not mentioned. What is mentioned in the Constitution of India? Under Article 112, there is a term called as annual financial statement. Annual financial statement. AFS, annual financial statement. That is mentioned in the Constitution of India. Now, point number two. Annually, the union government, I'll talk about union budget. Don't worry about state government budget. Focus on union budget. Annually, the union government will present union budget on the first working day, of February. First working day of February. Now, please do not ask me after this also. Please do not ask me, sir, what if 1st of February Sunday? Some of the students will not look at the statement and ask me, what if it is a Sunday? My dear, whichever is the first working day of February, on that day, union budget will be presented. It's a very simple idea. Point number three. Whenever the budget is announced, what generally happens is, look at this. The finance minister will give you details about overall expenditure the finance minister want to incur for next one financial year, and overall income or revenue that the government wants to collect in the next 1 year. It's a very simple idea. In next 1 year, next financial year, more important, in the next financial year, how much total expenditure government will be incurring, and how much will be the total income government would be collecting. Now, whenever you talk about expenditure, why is this actually done by the government? That is why Government of India announces all of this. Please understand, there is a fund called as Consolidated Fund of India. Please tell me, polity classes are over for you. I know for a fact polity classes are over for you. For those of you who for whom it is not over, don't worry, it will be done again. Right? You have an annual calendar. Please look at it. Whenever it is done, please attend it. Have you come across Consolidated Fund of India? Please tell me. Consolidated Fund of India, Article 266, 267, right? Consolidated Fund of India, Contingency Fund of India, and Public Account. So, in case of Consolidated Fund of India, what is a very important condition? If Government of India wants to withdraw even a single rupee, for those of you which it is not over, listen now. If Government of India wants to withdraw even a single rupee from Consolidated Fund of India, first they will have to take the approval of the Parliament. Very simple. If Government of India wants to spend money next 1 year, they want to spend money, they will have to withdraw the money from Consolidated Fund of India. Right? Because under Constitution of India, it says so. Article 266, 267 talk about these kind of funds only. So the argument is, if Government of India wants to spend money, they will have to take the money, withdraw the money from Consolidated Fund of India. But for Consolidated Fund of India's withdrawal, first they will have to take the approval of the Parliament. Now look at it. Expenditure is basically introduced in the form of appropriation bill. Whatever expenditure the government proposes for the next financial year, it is mentioned in the document called as appropriation bill. Now, can I say, using appropriation bill, after getting it passed through Parliament, it simply means Government of India is taking the approval of the Parliament to withdraw money from Consolidated Fund of India. All of you agree? It is basically taking the approval of Parliament to withdraw the money from Consolidated Fund of India. Now, the income or revenue part, it is generally provided in the form of finance bill. It is provided in the form of a finance bill, right? The government will introduce one more bill by the name of finance bill. In that, all the information regarding how much money government will collect by selling company, how much government will collect by collection of taxes, income taxes, corporate taxes, all the information will be provided in the finance bill. So appropriation bill will give you details of withdrawals, expenditures. Finance bill will give you the details of income or revenue collected by the government in the next one financial year. Point number four. Right? Understand the next point as well. The budget earlier, whenever you talked about the budget, there was a separate railway budget as well as union budget. Earlier, there was a separate railway budget followed by union budget. Right? We had a separate railway budget. Is it mentioned in the constitution? Again, no. Even railway budget is not mentioned in the constitution. But before independence, we had a convention, we had a practice. What was the practice? Separate union budget will be presented and railway budget will be presented. And after independence, we simply continued that practice. Couple of years ago, 2016 and 2017, Government of India said no need to have a separate budget. No need to have a separate budget. Why? There is no constitutional requirement. Size of the railway budget is very small compared to union budget. How much money we spend in railway budget, it is just a fraction of the money that we spend in railway budget. So what is the point of having this kind of a convention? What we do is we will merge railway budget into union budget. We'll simply merge a railway budget into union budget, and post 17 we have only one budget now, union budget. And point number 5, whenever you talk about budget can be like this. We'll use the term surplus budget, right? They refer to this as a surplus budget, balanced budget, and deficit budget. One is a surplus budget, balanced budget, and deficit budget. Now, what do you mean by this? I will start using the short forms here. Expenditure is E, revenue is R. Surplus budget is R is equal to E. Sorry, R is greater than E. My mistake, R is greater than E. That is a surplus budget. Balanced budget is R is equal to E, and deficit budget is R is less than E. That is, expenditure is greater than revenue or the income collected by the government. Any problem with this? Surplus R is greater than E, balanced R is equal to E, and deficit is R is less than E, or E is greater than R. Now please tell me, having discussed earlier, please tell me, does India have surplus, balanced, or a deficit budget? Let me see. Right? We have discussed all of this. I'll tell you the context also. Sir, you have not discussed a budget earlier. How do you say which type it is? My dear, do you remember RBI discussion? Do you remember RBI discussion? The discussion of RBI. And when we discussed RBI, did I not say annually Government of India will spend more money compared to revenue collection? Yes or no? Correct me if I'm wrong. Please do correct me if I'm wrong. Expenditure is greater than revenue. That is the reason I said government will end up borrowing from the market. That's the reason I said government will end up borrowing from the market. So now can I simply say that in case of India, generally we have a deficit budget? Let me know. Generally we have deficit budget. In case of India, we end up having deficit budget. And that's the reason from one year to the next year to the next year, they will keep on borrowing money from the market. Okay, so these are certain important concepts. Let me continue. There is a concept called as a gender budgeting, zero budgeting, and output budgeting. Three more concepts, but I'll take this up after the break. After the break, we'll have a discussion regarding a couple of more concepts related to budget, and we'll continue the discussion. Now, if you have any kind of a question, please do let me know. So please let me know how D2M will affect the economy. What is D2M? Biswajit, can you please clarify? I'm not able to get the acronym D2M. Please clarify what you're talking about. Okay. Then why payment banks are called commercial banks? Because please understand, no doubt, payment banks are not allowed to give loans, but payment banks will provide many of the services just like a commercial bank. That they will collect deposits, they will invest in government securities, they'll keep deposits with other bank as well, they will provide remittance services, etc. That is the reason these are part of commercial banks. I was not able to understand bankable infrastructure. Bankable infrastructure means a investor, let's say private company, if they want to invest in an infrastructure, they are taking lot of risk. Now the question is, when they are taking lot of risk, they would expect a certain returns from the project. So now the difficulty is, NABFID wants to give a loan to you. You are a private sector company. NABFID wants to give a loan to you. Now your difficulty is, how many projects in the market are bankable to you? Bankable means the amount of returns that you are going to earn. Amount of returns that you are going to earn, it is a satisfactory compared to the risk that you are taking. Right? So how will you find out these kind of bankable infrastructure projects? Right? That is the question. Okay. Remembering all four layers in the definition of NBFC, it is necessary. My recommendation, please do remember, UPC can ask you the questions on this. NBFC give loans to people. Is there any risk or not? Of course, yes. Of course, yes. I hope you understand. Anybody giving a loan, by default, there is a risk associated with that. Of course, yes. Risk is generally very high taken by NBFC. That is the reason NBFCs generally charge a higher rate of interest. Why expenditure budget is called appropriation bill? Appropriation means withdrawal. Appropriation means you're taking, right? Because you're taking the money, withdrawing the money from the Consolidated Fund of India, generally we'll call this as the appropriation bill. And right, and for some of the students, right, for whom polity is over, others don't worry, it will be over. Both the appropriation bill as well as right, the finance bill, both are type of money bill only. Both are type of money bill. Okay. What is the difference between NBFCs and a small finance bank? My dear, one is a bank, small finance bank, and the other one is a NBFC, non-bank. I hope you understand. Name itself will tell you the difference. Small finance bank is a banking institution which will collect time deposit, demand deposit. Right? NBFCs will not be doing that. I've already given the distinction. No, I've made a comparison. Please go forward. NABFID, non-deposit taking NBFC are similar. NABFID is basically a type of an NBFC only. You mentioned DSIB. DSIBs are domestic systemically important banks. For example, SBI, right? DSIB, one of the best example is SBI. Now, please tell me, don't you think size of SBI is very big compared to other banks? Point number one. Point number two, if SBI will fail, it will have a larger impact on the economy compared to other banks. That is the precise reason RBI says generally those banks which will have a size of more than 2% of GDP, I will classify them as a DSIBs, domestic systemically important bank. And because these are so important, we will not allow them to fail. Hence, I will impose more restrictions on DSIB. That's a basic idea for DSIB. Then how do non-deposit taking NBFCs earn? I'll give a very simple example. There was a non-deposit taking NBFC, or there is a non-deposit taking NBFC, IL&FS. IL&FS makes an investment in infrastructure, earns money through infrastructure investment. And there are many NBFCs. I hope you understand. There are around 10 plus classifications of NBFCs. There are more than 10 types of NBFCs, right, within a deposit as well as non-deposit taking. But all of that is not required for UPSC. Please remember, they will also have their own business of investment and they will earn money on it. Okay, done. So let's take a break now. We'll restart the discussion at 8:15. We'll restart the discussion at 8:15. Right? Please join back again at 8:15. Okay, welcome back. Am I audible? Can we start now? Am I audible? Okay, done. So let's start. So furthermore, important concepts in the budget. One is called as a gender budgeting. Second one is a zero-based budgeting. Third one is outcome budgeting. Let's go one by one. First one, gender budgeting. What is the definition of gender budgeting? It is an exercise wherein we will plan, execute, implement, and evaluate the budget in a way that will empower women and also ensure that benefits will be reaching them. I'll tell you the definition. Please don't worry. Don't say, sir, you're simply reading out the statement. I'll read out the statement, then I'll explain. What do you mean by gender budgeting? For example, in case of India, there is a need to promote empowerment of women. There is need to empower women. Correct? We need to ensure that more and more women will participate in the economy, more women will be educated, or more girl children will get access to nutrition, right? Skilling, access to education, schooling, etc. So the argument is, in case of India, please understand, it is one duty of government of India to ensure through their policies that women will be provided with job opportunities. School going children, especially girl children, will be given access to schooling, will be given access to education, will be given access to nutrition, etc. And even if they're not going to school, or if they're not going to, let's say, offices, don't you think widows in India who do not have any kind of family, it is a duty of government of India to provide certain assistance to them. So argument is simple here. Whenever you talk about gender budgeting, in 1 year, out of the total expenditure that the government is doing, how much money will the government use out of it? I repeat, how much money in this year will the government use to provide welfare to women? That is called as a gender budgeting. Anybody has a difficulty in understanding the statement or the definition, please do let me know. It is a policy approach to promote gender equity, to ensure there is a fair treatment of these genders in the economy. Now, why do we require it? Please have a look at it. There is a differing access to services such as education, healthcare, etc. for men and women. And whatever point I'm going to mention here, I've taken this from government document and economic survey. So if you have any problem, please raise it with the government of India as well as economic survey author. So point number one, this is a fact, by the way. There is a differing access to services such as education and health for both men and women in India. Meaning what? Please tell me, don't you think if there are children in a household, especially in a rural part of India, again, do not talk only about your house, talk generally about India. If there are children in a house in a rural part of India, don't you think first preference to send to school will be for boys in this? And the first preference will be given, that is for the boys to be sent to the school. What about girls? Cooking, right? Who will take care of the house? Who will take care of the cattle? Who will bring wood from the forest, etc., etc. Again, you may disagree. Nothing wrong with that. You may disagree, but this is a fact. So, point number one, there is a differing access for both men and women, boys and girls, whenever you talk about education, whenever you talk about nutrition, right? Whenever you talk about healthcare. So, that is the first point. Second point, it is the duty of the government to ensure everybody should get access to nutrition. Everybody should be given access to employment opportunities. Everybody should get access to skilling in India. So that is the second point. Third point, it will also promote better usage of labor services, because there are certain parts of the economy, there are certain sectors or industries where women labor is actually preferred more compared to male labor. For example, if you ask me, sir, any example where women labor is demanded more compared to male labor? Best example, textile sector, correct? Have you seen textile units, right? Nearby your villages or anywhere when you're going, textile units. right, where clothes are produced, the demand for female labor will be actually very high compared to male labor in the textile units. What about hospitality sector? What about hospitality sector? What about healthcare sector? So don't you think there are various parts in the economy where female labor requirement is more compared to male labor requirement. So if government of India will implement policies during their expenditure, that is during in a budget, if they ensure that part of the money will be used to promote, let's say, skilling of the labor, to promote education for female population, don't you think we'll be able to provide better skilled educated female labor to the economy? And finally, it has also been found in many cases that whenever women are empowered, whenever women have a high paying job or even a earning job, a salaried job, right, it will increase the power, or it will increase the empowerment of women, and the cases of violence against women have actually come down. So these are some of the reasons why government of India generally focuses in annual budgets. I repeat, these are generally the reasons why government in an annual budget will keep aside certain amount of money, use it only for promotion of gender equity, use it for skilling of a female population, use it for providing education for female population, use it for providing nutrition for female population, provide welfare payments to the female population. And this practice is called as gender budgeting. Anybody has a problem now? This practice is referred to as gender budgeting. It is done in order to ensure that budgetary policies will not increase the differences which is already existing in the society. These differences should be reduced. For example, I'll give a very simple data point for you. As per one of the surveys, right, as per one of the surveys, the name of the survey is the income inequality survey. As per that, around 19% of the income generated in India goes to female working population. I repeat, as per one of the surveys, and we'll talk about this again when I take up inclusive growth. Around 19%, it is in the range of around 18 to 19. Around 19% of the total income generated in India goes to female working population in India. And right, around 81 to 82% of the total income generated goes to the male working population. Which again, right, don't start arguing, sir, right, work productivity, etc., etc. My argument is, right, can you see there is a huge income inequality that is existing between male and female workers in India? Think of it. Right, just think of it. Don't you think there's a huge income inequality, gender gap in terms of right, income inequality that is existing between male and female workers in India? That is the reason there is a need for the government. There is a need for the government to ensure that these kind of gaps which are existing should not be increasing, should be reduced. And that is what government of India does through gender budgeting policy. It will mainstream the gender issues through the government policies. Mainstream means they will bring it into highlight. They will highlight these issues and they will try to address these issues. Promote a greater accountability of government's commitment towards gender equity. Government of India, for that matter, any party, don't make it political, any party that has formed the government, always they have been promoting the idea of women empowerment. But now the question is the government just talking, or are they also implementing policies in order to ensure women are empowered? So the question is that, is the government simply talking that we need to empower, right? We need to do this, do that, or are they implementing policies, right, to bring it into action? How will you find it out? Through gender budgeting. And right, it will also change the whole policy approach of government of India. It will change how government of India will incur their expenditure in a financial year. So these are certain very important points in the context of the gender budgeting. Now, have a look at this. Have a look at this. Over a period of time, the idea of gender budgeting was introduced in India from 2005 and 6. From 2005 and 6, we introduced the idea of a gender budgeting. So over a period of time, out of the total expenditure, how much money has been spent by the government for gender budgeting? Do not by heart the graph, just make observation. Can I say it is around 5%? I know, right? It's not exactly 5% also. For some months, for some years, it is more than 5. For some years, it is less than 5. But can I generalize? Can I generalize and say generally around 5 to 6% of the total expenditure, around 5 to 6% of total expenditure is incurred by the government in the form of gender budgeting. This is a trend. Please remember this. Why? If you want to write a way forward, you'll have to write a saying that we need to increase the amount of expenditure under gender budgeting. But please understand my next point also. You cannot say, I repeat, you cannot say government is not spending more money over a period of time under gender budgeting. I repeat, please understand my point here. You cannot say government is not spending more money under gender budgeting, or you cannot say government of India has not increased the money under gender budgeting. Because please do let me know. In 1 year, imagine government is spending 50 rupees. In 1 year, government is spending 50 rupees. Out of 50 rupee, government will spend 5 rupee on gender budgeting. Can I say this is 10%? Can I say this is 10%? Second, right? I hope you understand. In next year, imagine you will spend a 60 rupee. Total amount of expenditure is 60 rupee. Out of that, you will spend a 6 rupee in gender budgeting. So can I say out of the total expenditure in terms of percentages, there is no change. But overall expenditure, has it changed? Think of it. Right? Overall expenditure, has it changed? Of course, yes. The expenditure has increased, but as a percentage of overall expenditure, it has not changed. So remember that point. So as a percentage of overall expenditure, it is generally around 5 to 6%, right? But overall expenditure, they have increased. But argument that is way forward is simple, even in terms of percentages, because the women population, female population is very high in India, right? Around 45% plus. So there is a need to increase, right? Even the percentage expenditure. Now, when I say gender budgeting, what does it actually mean? What does it actually mean? Please understand this. Imagine, right? Imagine, simple example. Government of India is spending 1 lakh crore rupees under the concept of gender budgeting this year. Let's say, imagine government of India spending 1 lakh crore rupees under the concept of gender budgeting this year. What does it mean? Various schemes are being implemented by the government. Various schemes are being implemented by the government, wherein government will be spending 1 lakh crore rupees in these schemes. Very simple idea. Okay. What is the meaning of gender budgeting? Government will be spending this amount of money under various schemes in the next one financial year. That is called as a gender budgeting. Now, these schemes are generally divided into two parts. These schemes, I'll give you examples, just wait for some time, are divided into two parts. Right? One is called as a Part A scheme, and obviously the second has to be Part B scheme. One is a Part A, second one is Part B. I'll come back to this. Please have a look at this. For the current financial year, how much is the gender budgeting expenditure? How much has been allocated in the budget as of now? 2.23 lakh crore rupees, or 2.23 trillion rupees. But what is this 2.23 trillion rupees? This much amount of expenditure will be incurred by the government to promote a gender equity in Part A schemes as well as Part B schemes. Now, please do not by heart everything here. Remember one example of a Part A, remember one example of a Part B. But why do we divide that into Part A and Part B? Very simple. Right? There are certain schemes where whatever is the allocation done by the government, 100% of the allocation will be used for providing welfare to women only. I'll repeat the statement. There are certain schemes where whatever the money allocated, all the money will be used for women only. That is, the schemes are targeting only women. Sir, any example of it? Please have a look at, right? Please have a look at widow pension scheme. The third one. I was about to write, but it is there in the slide. Please have a look at Indira Gandhi National Widow Pension Scheme. Now, let's say this year, government will allocate 100 crore rupees for National Widow Pension Scheme. Now, please tell me, if the name of the scheme is Widow Pension Scheme, who are the beneficiaries? Can male population be beneficiaries of this scheme? Think of it. Look at the name. Right? Don't say maybe. Right? Could be. Don't use those kind of diplomatic terms here. It is widow pension scheme. So the beneficiaries will be only female population. So can I now say, at least with this, can I now say 100 crore rupee allocation will be used, right, only for women beneficiaries? So those schemes where only women are the beneficiaries are called as Part A schemes. And Part B schemes are those schemes where at least 30% of the allocation will be used to provide benefit to women. Simple idea. Part A, 100% of the allocation will be given for women beneficiaries. In Part B, at least 30% of the allocation will be used for women beneficiaries. This is basically, right, this is basically how the budgetary allocation for gender budgeting will be divided into two parts, Part A and Part B. Now, going forward, one of the concerns which has been raised by various experts is, although multiple schemes are there, not all the ministries or very few of the ministries are actually involved in the gender budgeting exercise. I'll repeat the statement here. Right, this is a concern regarding gender budgeting in India. One of the concern is percentage will have to increase. Second concern I'm raising now, various experts have pointed out very few of the ministries or departments are actually involved in gender budgeting. There is a need to bring in more and more departments, more and more ministries into the exercise of gender budgeting. That is the second very important point. Please remember this. Please remember this. Okay. And the third very important concern I'll raise now. Please tell me, if government will allocate, if the government allocates a 2.23 trillion rupees, does it mean that all the 2.23 trillion rupees will be utilized? Let me know. I'll repeat it again. I'll simply repeat the statement. If the government will allocate in the budget 2.23 trillion rupees, does it mean all the 2.23 trillion will be utilized? Absolutely no. That is a third concern. This is the third concern. That is, money is allocated, but there could be underutilization of the money. There could be certain ministries which are not utilizing all the money which has been allocated. Right? That is the third concern. Please remember it. Okay. Right. So these are certain important points. And the fourth, sorry, just a point regarding gender budgeting. Out of all the funds allocated, where does government utilize most of the funds in the gender budgeting? It is the Part B scheme, where at least 30% is allocated for women beneficiary. It is the Part B scheme which accounts generally around 60 to 70% of the overall allocation done in the gender budgeting. So these are certain important points in the context of gender budgeting. Can we go forward now? Let me know. Can we go forward? Anybody has an issue with what we have discussed in gender budgeting? Anybody has an issue? Please do let me know. Otherwise, I'll go forward. Next, the idea 60%. What do you mean by 60%? Right? Are you asking what is that 60%, 70% number? The 60%, 70% number I said was out of total gender budgeting of, let's say, 2.23 lakh crore, which has been allocated this year, around 60 to 70% of it. And again, I'm saying around because if you have seen the graph, you will realize it is not uniform in all the years. In some of the years, more funds have been allocated for Part A, less for Part B. In some of the years, more for Part B, less for Part A. But what is the average? What is the average? The average is around 60 to 70% of the total expenditure under gender budgeting is allocated for Part B scheme, where only, where around 30% plus of the money will be utilized for women beneficiaries. Okay, done. Let me go to the next one. Concept of outcome budgeting. Right, concept of outcome budgeting. Now, what do you mean by outcome budgeting? Let me explain with a picture here. I've given a very simple table. Please do not by heart this table. Do not waste your time. Please do not by heart this table. What you need to observe, point number one, is the table visible to all of you? Let me know. Is the table visible to all of you? Right? So, of course, yes, it should be visible. If it is not visible, please hit the refresh. Please hit the refresh. Okay. Now, please understand what you need to observe. Make observation here. Column number, column number 2. Right? What is there in the column number 2? Name of the scheme or sub scheme. Column number 3, projected outlay. Right? Column number 4, the output or deliverables against the outlay. And column number 5, projected medium term outcomes. Now, don't by heart them. Please do not by heart them. Now, I'll give a very simple example. Imagine there's a scheme by the name of ABC. Whatever the name, don't worry. The scheme name is ABC. And government will simply say, in the name of scheme ABC, we have spent 80,000 crore rupees. And because of this 80,000 crore rupees, we have been able to construct 4 lakh houses for women. 4 lakh houses for women. And when I say women, please understand, many of you are saying, sir, if the house is constructed, the whole house will get the benefit. That is, all the people will get the benefit. How can you say only women? Argument is, my dear, beneficiary. Who is the beneficiary? If government wants to give you 4 lakh rupees for construction of the house, who is identified as a beneficiary? Women is identified as a beneficiary. That's the reason these kind of schemes where housing is done, these are kept right under part A. Okay. So understand this. Imagine, right, the name of the scheme is ABC. Projected outlay or the amount of expenditure incurred is 80,000 crore. And I'm saying, as a result of this expenditure, we have constructed 4 lakh houses. Now, please let me know. Can I say what we are doing here is we are connecting input with the output? Let me know. Can I say what we are doing in this table is very simple. We are creating a linkage between input as well as output. That is, we are trying to find out how much money we have spent and what is the result, what is the outcome of this expenditure. This budget is called as outcome budget. This exercise is called as outcome budgeting. Outcome budgeting is an exercise wherein whatever expenditure is done by different ministries, these expenditures are always represented in the form of deliverables. Deliverable means, what are we achieving using this money? We are spending this money. So what is the change in number of houses that we have constructed? We are spending this much amount of money. What is the length of a road that we have constructed? We are spending so much amount of money. How many schools we have constructed? So simple idea. Outcome budgeting is an exercise where input is connected with the output. Now why? Why should we do this? Point number one. Don't you think government of India has a limited amount of money? Think of it. Don't you think government of India has a limited amount of money? In the sense, resources are very limited. Now, don't you think because the resources are limited, government should hold every ministry accountable how they are using this money? For what purposes they are using this money? And if they're using this money, then what have they achieved using this amount of money? So, increasing transparency, increasing accountability, increasing the visibility for the people. For example, if you read a document where government of India says, tell me what do you think? Okay, you read a document where government of India says, last year we spent around 40,000 crore rupees, right? And we constructed, let's say, 8 airports in India. Don't you think government is telling you information, putting information in a public domain to make the process transparent, to improve the credibility of exercise done by the government of India? Of course, yes. If you do not trust me, read article regarding railway stations today. Read the article regarding railway stations today. They'll say they are going to develop around 500 plus railway stations using around 20,000 plus crore rupees. So what are they trying to do? They are trying to improve the credibility of their expenditure in the economy. Right? That's a basic idea. Under this, it will establish the relationship between output as well as input. The budgets are developed based on the relationship of expected results. What are we trying to achieve using this? It will enhance the visibility, right, into how government policies are working out at the ground level. What is the result of these expenditures incurred by the government, etc. Right? In this, the budget allocations are always measured in terms of their outcomes. This is basically the concept of right, the outcome budgeting. Any problem here? Can we go forward? Let me know. This is basically the concept of outcome budgeting. Can you explain again the outcome budgeting table 2017-18? I said, imagine there's a scheme by the name of ABC, and under this scheme, we have spent 80,000 crore, and as a result of this, we have constructed, let's say, 4 lakh houses. Now, what are we trying to do here? We are trying to make a connection. We are trying to create a linkage between the input as well as output. Right? We are trying to create a linkage. That is called as a outcome budgeting. Now, you can check every ministry, any ministry for that matter. You can go to Ministry of the Ministry of Ministry of Highways. You can go to Ministry of Ports. You can go to Ministry of let's say Finance. You can go to any ministry website. In the publication, they will publish one report. Every ministry does it, right? They will basically publish a report which is called as a outcome budget. Every ministry will publish outcome budget, which means they are trying to show to you how much money they have spent and what has been the deliverable because of this expenditure. Okay, this is basically the idea. Now, do not by heart this table. Please do not by heart this table. This is not required for you. Please do not by heart this table. What is the fifth point? 1, 2, 3, 4, and 5. In this, right, the budget allocations are always measured in terms of outcomes. This is the best example, my dear. This is the best example. This budget is measured in terms of outcomes. That is the fifth point. Okay. Can we go forward? Sir, outcomes should be visible. What happens in case of a non-visible outcomes? They will give you the details of all of it. You tell me, what do you mean by examples of non-visibles? You tell me. Because expenditures will have to be mentioned. How much expenditure has been incurred by all these ministries, they will have to give a report. So anything which is non-visible, right, they will give you certain measures for it. For example, education. For example, education. Now, in case of expenditure education, can I measure the outcomes in this way? How many new schools we have been able to construct? What is the change in the enrollment of the students? Please do let me know. Right? What is the enrollment numbers of the students? How many students we are able to retain in the schools? Right? How many midday meals we are providing? What is the movement from the class 9th to the class 10th, etc., etc. There are so many parameters using which you can measure always the outcomes. Now, the next concept is zero-based budgeting. Let me explain. Follow the discussion carefully. Zero-based budgeting. What do you mean by zero-based budgeting? Follow this carefully now. Example 1, example 2. Example 1, example 2. Right? In example 1, the finance minister will say, last year for the education ministry, last year for education, that is for ministry, I allocated 100 crore rupees. This year, I will increase the allocation by 20% to 120 crore rupees. Understand this. Last year, I allocated 100 crore rupees. This year, I will increase the allocation by 20% to 120 crore rupees. This is example 1. Example 2. The finance ministry will ask the minister for education Please tell me for what purposes you will require money this year. Understand the difference? In example 2, finance minister will ask the minister for education, please tell me for what purpose, for what reasons you need money. Otherwise, if you do not tell me for what purposes you require money, I will simply allocate a 0 rupees to you. I hope you understand this. If you do not tell me for what purposes you will need money, I will allocate 0 rupees to you. Now, the minister will say, sir or madam, I want to construct 10 high schools. So the finance minister will say, okay, 10 high schools. So 0 rupee plus for 10 high schools, you will require 100 crore rupees. Then the minister says, I also want to construct 15 colleges in northeastern part of India because I want to increase the penetration in certain regions. Then finance minister says, okay, 0 plus 100, I will allocate another 200 crore rupees for this ministry. Now, total allocation done in the example 2 will be 300 crore. Total allocation done in example 2 will be 300 crore. Now, please make observations. I will use statements now. Statement 1. In example 2, the allocation done in this year is independent of any allocation done in the past. I'll repeat the statement. Tell me correct or not. Observe and tell me. In example 2, the allocation done in this year, it is independent of allocations are done in the past. That is, whatever allocation was done in the past, it is ignored. We are not considering that today. And today, based on the requirement, we are allocating the funds in the example 2. Some of you are saying no. Why are you saying no, my dear? Tell me, why are you saying no? Can I say in example 1, allocation done in this year is based on allocation done in the past? Correct or not? In example 1, in example 1, allocation done in this year, it is decided based on what was the allocation done in the last year. That is, the last year allocation is taken as a base. And right upon this, we will decide what should be the allocation this year. This is called as incremental budgeting. This is called as incremental budgeting. And this is this is called as zero based budgeting. Right? I hope you understand why this is called as zero based. Tell me now. All of you understood why this is called as a zero based. In case of zero based budgeting, we start the allocation from zero. We'll start the allocation from zero. And based on the requirement, we'll keep on allocating the funds to the ministry. And what is the important point in the zero-based budgeting? The allocations which are done this year, right? There is no base for this taken. What was the allocation done in the past? It is ignored. Whatever funds were allocated last year, it is of no importance to us under zero-based budgeting. Right? It is independent. Whereas in case of incremental budgeting, what was done in the last year, what was done previously, that will be taken as a base, and we are going to change the base, right, to arrive at incremental budget. Right? So this is incremental budgeting, this is zero based. Please tell me which is better according to you. Please tell me which is better. Do you think incremental budgeting is better or zero based budgeting is better? All of you will agree zero based budgeting. Arey Baba, don't say incremental. Zero based budgeting is better. Why? Please tell me, in case of zero based budgeting, are you not allocating the funds based on what is the priority this year? Tell me now. Are you not allocating the funds based on what is the priority? If you have limited amount of resources, right, do you think incremental budgeting will help you in finding out which is priority? No. They will simply say, right, increase by 10%, increase by 20%. Whereas in case of zero based, you will have to tell them what is your priority, where do you want to spend money, right? Please give out your priorities. And based on that, I will decide how much funds I will have to I will allocate to you. And second, Compared to incremental budgeting, don't you think zero-based budgeting, there is more accountability on the ministries? Let me know. Compared to incremental budgeting, in zero-based budgeting, don't you think government knows for what purposes you have taken the money now? Now you will have to be very careful, because I know I've allocated 100 crore for high schools. I've allocated 200 crore for colleges. Can this kind of a breakup be observed in incremental budgeting? No. So accountability will increase, transparency will increase, efficient utilization of resources can be done in zero-based budgeting. In case of India, we generally do not use right zero-based budgeting every year. We do not use zero-based budgeting every year. Only in the past certain years, where the resources with government of India were very limited, we have actually adopted the idea of a zero-based budgeting. That happened during 1980s. So in case of zero-based budgeting, please have a look at it. Every program is started at a zero base, and every allocation has to be justified. Under this, each year's allocation is done independent of the allocation done in the previous year. It covers both existing as well as new programs or new schemes. You can bring in new schemes also, justify it, funds would be allocated. Old schemes you want to continue, funds would be allocated. It will provide a mechanism using which government can use the resources very efficiently, and will also help government in making credible and rational allocations, or fund allocations can be done. Now, couple of more points. What are the objectives? Ensure that what are the important tasks, what are the priorities for you, funds will be allocated only for that. That can be done in zero based. Allocations must be justified by every ministry. Wastages of resources cannot take place under zero based, and tasks or activities always will be under constant watch of government of India, because government of India knows for what purpose you have taken how much money. So there is a constant vigil of government of India, constant watch by government of India, so there is more accountability. So 1980s we used zero based, but now right we generally do not use it. Okay, and the reason is very simple. Earlier there was a huge limitation on availability of resources, right? That is the precise reason in 1980s we implemented a zero based budgeting. Can we go forward now? How wastage of resources prevented from wastage? My dear, if I allocate for every objective, if I keep on allocating funds, please tell me, right? Listen to the lecture carefully, no? Listen to the lecture. In incremental budgeting, do you justify why do you require 120 crore rupee? Let me know. In incremental budgeting, are you justifying why do you require 120 crore rupee? Is there any justification? Answer is yes. How? What is the justification here? You tell me. Arey Baba, listen, no? Listen carefully. You are not listening only. Where is the justification? For what purposes 120 crores are required? You are simply saying 100 crore was last year. This year increase it by 20%. Whereas in case of zero-based budgeting, are you justifying why 300 crore rupees should be allocated to you? Of course, yes. But that is the reason. Okay. Now, how budget is prepared, right, and how it is presented. Listen to this carefully. How budget is prepared and how it is presented. Preparation of budget is very simple. Let's start. The Ministry of Finance. The Ministry of Finance will prepare a circular which is called as a budget circular. Circular is nothing but a document. So the Minister of Finance will prepare a circular, that is a document, send it to all the ministries. Send it to all the ministries. So when will they do it? Usually 4 to 5 months. And because please understand, it is not a constitutional process. Budget is not a constitutional process. So fixed time frames are generally not there. So 4 to 5 months prior to implementation or announcement of the budget, government will prepare a budget circular, send it to all the ministries and departments. Now, all the ministries and departments will prepare their own requirements, and send it back to Minister of Finance. Now, Minister of Finance will hold consultations with all of them, right? Will hold consultations with these ministries or departments, then finally decide how much funds will be allocated to Ministry 1, Ministry 2, Ministry 3, 4, etc. And now once all these are decided, all of these will be finalized and prepared in a document which is called as a budget document, that is nothing but appropriation bill. Any problem with the process of preparation of the budget, please do let me know. Right, it says a budget division will consolidate the estimates and prepares the budget. Right, so Minister of Finance sends a circular, collects all the information from all of the ministries and departments, holds consultations with all of them, and then finalizes how much money should I allocate to Ministry of Family Welfare, how much money should I allocate to Ministry of Heavy Industries, how much money I should allocate to Ministry of let's say ports or highways, etc. All of these are consolidated into a document. These are called as budget documents. This is how budget is actually prepared. Now, once the budget is prepared, what is the next step? On the first working day of February, the budget is presented on the floor of Lok Sabha. On the first working day of February, the budget is presented on the floor of Lok Sabha. That is, Finance Minister, right? Have you seen this? Finance Minister will take a suitcase or, right, basically a bag or let's say a red color cloth, etc. They will take the documents to the floor of a Lok Sabha and they will start reading out. Now, please understand, earlier, physical documents were actually provided. Earlier, the budget documents were actually printed. Today, we are not printing budget documents. Today, they are calling this as a paperless budget. Right? Let me know whether have you come across this term or not. Because of the pandemic, right? During the pandemic, Government of India said, we will not print the documents now. We will not print the budget documents. What we will do is, we will go for a paperless budget. What do you mean by paperless budget? Now, next year, if you have time, which I would strongly recommend, please see the budget. When it is presented on the first working day of February, please see the budget. Earlier, Finance Minister used to have set of documents, right? They used to have set of documents and they used to keep on turning the page, read, turn the page, read, turn the page, read like this. Now, no, paperless. Paperless means now a tablet will be there in front of, right, the Finance Minister, and the Finance Minister will keep on scrolling the page like this. If you don't trust me, go to Google. This year's budget is video is available. Have a look at it. Finance Minister will keep on scrolling in the tablet and keeps on reading the document. And please understand, the document that the Finance Minister is actually reading, this is called as a summary document. The document is called as a summary document. What is this idea of a summary document? The appropriation bill, the money bill, etc. These are not small documents. These are very bulky documents. I hope you understand. These are bulky documents, generally running into hundreds of pages. Do you think Finance Minister will have time and the ministers will have so much of patience to listen to all the 100 plus 100 plus 100 pages of the speech? No. Right? That is the reason what is generally provided is a summary document. Summary means overall summary of the expenditure as well as income will be provided by the Finance Minister to the Parliament. So step is very simple. On the first working day of February, Finance Minister will present the budget on the floor of the Parliament on behalf of the President of India. Next, after the presentation is done, there is a general discussion that takes place. What do you mean by general discussion? All the parties, right? That is opposition parties. They will be given a chance to, right, provide their viewpoints, to basically say what do they think about the budget. The budget proposal has been done. Now opposition party members will basically say or will provide their viewpoints about the budget. Right, they will say budget does not have anything for poor people, right? Budget does not do anything to promote recovery, budget is not doing to bring back the black money into India, etc., etc. Basic viewpoint. Now, after the general discussion is done, generally the discussion will happen for 2 to 3 days. After that, demands for the grants will be considered by the standing committees. Now, there are more than 20 standing committees in India. What is the demand for a grant? Simple, right? Imagine government of India, that is finance minister, has decided to allocate 40,000 crore rupees to Ministry of Heavy Industries, right? Ministry of Heavy Industries, that the finance minister has allocated 40,000 crores. Now, how this 40,000 crore is allocated? There will be a breakup provided. All of you agree? There will be a breakup provided, 40,000 crore, right? Out of this, 30,000 for this, 20,000, I'm sorry, 10,000 for this. Same way, finance minister will also allocate, let's say, 1 lakh crore rupees for Ministry of Highways. They will allocate 1 lakh crore for Ministry of Highways. Now, they will divide this 1 lakh crore rupee into different components. For what purpose 1 lakh crore has been provided? All these are called as demands of grants. All these individual allocations are referred to as demands of grants. Now, please tell me, think of it and please answer to this question. Do you think Parliament, that is, let's say Lok Sabha, has sufficient time to get into individually all the demands, have a detailed discussion, and also study whether they should be allocated or not? Think of it. Do you think Parliament has so much of time? No, they do not have time. They absolutely don't have so much of time. So, what we'll do now? We have standing committees. We have standing committees. There are around 24 standing committees. Departmental standing committees are there. Let's say there is a standing committee for, right, let's say agriculture. So whatever are the demands of grants, whatever are the demands of grants for agriculture sector, we will allocate it to this standing committee. We'll simply allocate to this standing committee. Now the standing committee will study and give a recommendation, give a report to the parliament. Whether should we allow this much amount to be withdrawn, or there is a need to clarify, etc., etc. So that is the work done by the standing committees. And once standing committees will give the report, now there is a discussion in the Lok Sabha and the voting will take place in Lok Sabha. Individually, the demands of grants are taken up, discussed, and voted. And once all the demands of grants are taken up, discussed, and voted, right, we'll put together a bill which is called as an appropriation bill. Now, this appropriation will be passed from Lok Sabha, sent to Rajya Sabha. Again, discussion will happen in Rajya Sabha, then sent to President of India. Once the President of India will sign, right, will simply say the appropriation bill has become an act. Now, Government of India is allowed to withdraw money from Consolidated Fund of India. And once appropriation bill is passed from Lok Sabha to Rajya Sabha, now finance bill will be taken up in Lok Sabha. Again discussion, right? Voting, passage, send it to Rajya Sabha, discuss, voting, passage, then send it to President of India. Right? This is how budget documents, so that is appropriation bill and right basically the finance bill are discussed, passed, sent to the president. Once the president of India will sign, will simply say budget documents right will be implemented now. Can we go forward now? Anybody has an issue regarding what we have discussed? Sir, please repeat. Demands of grants. Demands of grants represent how much money has been allocated by the finance minister to the ministries. I'll repeat it. To the ministries, how much money has the finance minister allocated? Meaning what? 40,000 crores should be withdrawn from Consolidated Fund of India, given it to right, the Ministry of, let's say, Heavy Industries. But for what purpose 40,000 crore is being used? It is for, right, purpose A, purpose B, purpose C. That is basically the concept of demands of grants. Okay. In Rajya Sabha finance bill voting, I will not enter into voting discussion here because please understand, you need to understand the concept of money bills. You need to understand the concept of money bills. For those of you, the polity is over. These two documents are money bills. So you already know what is the role of Rajya Sabha in the money bill. For those of you for whom the money bill, that is the polity is not over, when you study that, apply that logic here. Because I can't enter into polity. I'm teaching economics. I can't enter into polity. I cannot simply say money bill features are these, right? The financial bill features are this. Again, in financial bill, type A, type B, etc. That is not required in economics. Please study that under polity. Done? So this is how budget documents are introduced and passed in parliament. And now we'll start implementing the budget. Can I go forward now? Let me know. Can I go forward? Done. So we'll stop the discussion regarding the fiscal policy today. Let's solve questions. Tomorrow we'll start discussing. Start discussing the next concept related to the budgeting exercise. Any problem? Let's go. Let's start now. Let's start. Solve the questions now. Okay, 57% have answered correctly. Why? It should have been higher, right? The money multiplier in an economy increases with which of the following? Increase in the CRR, increase in SLR. Please tell me. That's the reason I asked you people to keep revising. If CRR, SLR is increased, what do you think will happen to credit issued by banks? Simple question. If CRR, SLR is increased, what do you think will happen to credit loans issued by the banks? Loans issued by the banks will reduce. If the credit creation in the system will reduce, what will happen to money multiplier? Think of it. If credit creation in the system will reduce, what will happen to money multiplier? Money multiplier will reduce, correct or not? Right? Money multiplier will go down. Right? Please go back. Right? If you have not revised, please go back. M3 upon M0, money multiplier. Come to the third point. Increase in the banking habit of the people. People will save more money, deposit more money in the bank. People will save more money, deposit more money in the bank. So don't you think as a result of this, money multiplier in the economy will start increasing? Statement C is correct. Increase in the population of the country. Increase in the population of country doesn't necessarily mean money supply will increase. I hope you understand by that statement. Increase in the population doesn't necessarily mean the money supply will increase. No. So option D is wrong. Right option is option C here. Right option is option C. Money multiplier we've discussed. Please revise it. Please revise it again. Okay, 47% have answered correctly. Why? In India, the central bank's function as a lender of last resort usually refers to which of the following? Lending to trade and industry bodies when they fail to borrow from other sources? Please tell me. So first is also correct. How? Where did we discuss? Where did I say RBI will lend to industry bodies? Anywhere. Please tell me. If I've said that, correct me. I'll only accept it that it is wrong. Because first statement is wrong. RBI doesn't give loan to trading sorry, the The corporate sector, RBI doesn't give loan to industry bodies. No way. They will not give it. Lending to trade, right? Do you think RBI will directly give loan to a company? Where? Which example? Where have you come across it? Please tell me, because I have not told you this. For a fact, I have not told you anywhere. For example, can you directly take a loan from RBI? Let me know. Individual. Can you take a loan from RBI directly? Can I go to RBI governor and say, I'm teaching economics, so please give me loan? No, no way. RBI doesn't deal with individual borrowers directly. They will always deal with the banks. Through the banks, they will deal with customers. Right? First one is wrong. Second one is correct. Provides liquidity to the banks having temporary crisis. Providing liquidity to the banks whenever there is a temporary crisis. Correct or wrong? For example, we have a repo rate. We have a right a standing deposit facility. We also have a marginal standing facility. Did I discuss marginal standing facility earlier? I'll tell you when I've discussed. I believe I've discussed on Wednesday. Right? I believe I've discussed on Wednesday. Last 10 minutes, please check. I'm pretty sure I've discussed on Wednesday. That is when I was discussing quantitative set of tools under the RBI policy. So providing liquidity to the banks whenever there's a crisis in the banking sector, yes. Lending to the governments to finance budget deficit, no. Please understand the logic behind it. Is RBI called as a bank of last resort because it will give loan to government of India? No. I hope you understand. Is RBI called as bank of last resort because it will give loan to government of India? No, because it will provide assistance to banking sector even when there is a crisis in the banking sector. Okay, so second statement is correct. So right option for the question will be option B here. Okay, 51% have answered correctly. Let's start. Consider the following statements. The governor of Reserve Bank of India is appointed by the central government. Correct? Let me know. Statement is correct? Yes. We have discussed this, right? Government of India will appoint RBI governor, deputy governors, etc. Second statement, certain provisions in the Constitution of India give the central government the right to issue directions to RBI in public interest. Is the second statement correct? Is the power to issue direction to RBI under Constitution of India or under RBI Act? Think of it. Is it under the Constitution of India or is it under RBI Act? It is Section 7 of RBI Act. So second statement is wrong. In fact, in Constitution of India, RBI is mentioned only under 7th schedule. Tell me, what is the importance of that? That should be very clear to you. The term RBI is mentioned at only one place in Constitution of India. That is at 7th schedule. In 7th schedule, what you will have? The areas of central government, powers of central government, powers of state government, and concurrent. So in the union list, RBI is mentioned. In the union list, RBI is mentioned. That is the only place. The governor of RBI draws his powers from RBI Act. Of course, yes. Third statement is correct. Whatever RBI governor does, whatever RBI does, everything is from RBI Act of 1934. So 1 and 3 are correct. Right option will be option C here. Okay. And again, I've taken all these questions from previous year. Right, sir, can the same questions be asked with the new options? Of course, yes. Right, of course, yes. Only one statement is correct. Only two statements are correct. All the three statements are correct. Again, don't worry about options. I generally see some of the students are worried about options. My dear, my argument is, do not worry about options. If your fundamentals are very, very strong, your conceptual clarity is very high, whatever is the combination, let them give it, you will be able to solve it. Only thing is that in the new set of options, there is no elimination method. That's a fact. Okay. Next one. Those who want to have a practice for the new scheme of options, do not use elimination anywhere. Do not use elimination anywhere. Right? Start solving statement 1, statement 2, statement 3. That is your preparation for new type of options that the UPSC will give you. Okay. 50% have answered correctly. With reference to UCBs, urban cooperative banks in India, consider the following statements. They are supervised and regulated by local boards, by the state governments. No, it is by RBI, Reserve Bank of India. They can issue equity shares and preference shares. Is the statement correct? Please check the PPT, right? The new Banking Regulation Amendment Act of 2020. Under this new Banking Regulation Amendment Act, are they allowed to issue shares in the market? Answer is yes. They are allowed to issue bonds as well as shares. Third, they were brought under the purview of a Banking Regulation Act of 1949 through an amendment in 1966. Statement is also correct. 2 and 3 are correct. Only two statements are correct, or right option B will be correct here. Okay. 60%. To combat demand side inflation, which of the following activities would be preferred by RBI? First one is buy government securities. If RBI will purchase government securities, what will happen to money supply? Money supply will increase. All of you will agree. If RBI will purchase government securities, money supply will increase. That will cause inflation. So first one is wrong. Increase repo rate. If RBI will increase the repo rate, money supply will decrease. So we can use a second one. Print more currency. If RBI will print more currency, money supply increases. That will cause again inflation. Third one is wrong. Decrease SLR. If RBI decreases SLR, right, money supply, that is, the banks will have more money to lend now. Credit supply will increase. Money multiplier will increase. That will cause inflation. So fourth one is wrong. Only second is correct. Right option is option B here. Anybody has a difficulty? Anyone has a difficulty, please do let me know. Right option is option B here. Only 2 is correct. Let me go to the next one. Okay, 39% have answered correctly. In the context of Indian economy, which of the following is or are the purpose or the purposes of statutory reserve requirement? What kind of reserve requirements we have in India? We have a CRR, cash reserve ratio. We also have SLR, statutory liquidity ratio. Both are collectively also referred to as variable reserve requirements. Now, what is the use of these kind of reserves? What is the use? Point one, please correct me. Please correct me if I'm wrong. Can I say these kind of reserve requirements RBI will use to control how much credit will be created by the banking sector? Correct? How much credit can be created by the banking sector? RBI can use these reserves. Point number two, why do you think RBI will ask the banks to keep certain assets in the form of SLR? Why do you think RBI will ask bank to keep certain amount of cash with Reserve Bank of India? Why? What is the reason? Can I say to make the bankers, that is the deposits of the money, I'm sorry, deposits of the customers, to make the deposits of the customers safe and liquid? Correct or not? Do you remember the concept of liquidity coverage ratio? Right, the amount of the G securities that the bank will have, they will sell it, they will have money now, they will allow the customers to withdraw the money. That is basically safety liquidity feature. So don't you think the requirement to keep these SLRs, etc., it is for this only, to ensure that certain liquidity is there in the bank, so that whenever the customers will start withdrawing, they can use this liquidity. So first statement is correct. Second statement is also correct. Third, to prevent commercial banks from making excessive profits. That is not how RBI uses CR and SLR. Right? That is not how RBI uses CR and SLR. That is not the objective of CRR and SLR. To force the banks to have sufficient vault cash to meet day-to-day requirements, no. Day-to-day requirements, no. This is not the reason. Vault cash requirement is to ensure that, and I hope you understand, vault cash is not even covered under CLR and SLR. Vault cash is to ensure that the banks will not use all their money and start lending in the market. They will have to keep certain amount of money in the form of cash only. That is the meaning of vault cash. So fourth one is also wrong. First and two are correct. Right option will be option B here. Next one. Okay, 52% have answered correctly. Let's start. Which of the following measures would result in an increase in the money supply in the economy? Purchase of government securities from the public by the central bank. Any problem with this? Of course, yes, money supply will increase. Deposit of currency in commercial banks by the public. Many of you will agree, say or argue and say, sir, second one is correct. Second one is not correct. Second one is wrong. Why? Do you remember M3? Please do let me know. Do you remember M3? What is M3? If I want to write M3, it will be cash held by the public plus, right, the demand deposits in the bank plus, right, the time deposits with the bank. Let's start. Imagine cash with us is 100, demand deposits are 200, time deposits are 300. Now please tell me how much is the overall money supply M3? 600 rupee. Now you will take 100 rupee cash, deposit that in a bank. You'll take 100 rupee cash, or let's say you'll take 50 rupee cash, deposit that in a bank. Now cash will fall down to 50 here. Demand deposit will increase to 250 and time deposits will become 300. Now how much is M3? M3 is still 600. All of you will agree now? M3 is still 600. So deposit of currency in a commercial bank, immediately it will not change the money supply. Over a period of time, of course, yes, money supply will change. So deposit of currency in commercial banks, no, it will not change. Borrowing by the government from the central bank. If the central bank will give a loan to the central government, will that increase money supply in the economy? Think of it. If RBI will give a loan to the central government, will it increase money supply? Answer is simply yes. Right? Government has more money means overall economy now has more money. So third one is also correct. Sale of government securities to the public by the central bank. Exactly opposite. Exactly opposite. Sale of government securities to the public by central bank. It will reduce money supply. Fourth one is wrong. So 1 and 3 are correct. Right option will be option C here. Okay. Now, related to this, right? Don't worry, you'll cover these also. Related to this, let me show you one more question. I will not start polling. Look at it. It should not be very difficult to you now. Please look at the question. No need to poll. Directly you can answer. If you withdraw 1 lakh rupees in cash from your demand deposit account at your bank, the immediate effect on the aggregate money supply in the economy will be, can I say option D here? Let me know. Can I say option D? You withdraw 1 lakh rupees. So M3 will remain same. M3 will not change. M3 will remain same. Immediately nothing will happen. Okay, so right option is option D here. Now, right, come to the previous question. Last question. After this, we'll stop. Okay, after this, we'll stop. We'll take a couple of more are there. We'll take it up tomorrow and finish up. Don't worry. Okay, 62% have answered correctly. Let's start. What is or are the facility or facilities the beneficiaries can get from the services of Bank Sati in a branchless area? It will enable the beneficiaries to draw their subsidies and social security benefits in their villages. Is it correct? I've told you all of this. Is it okay? You will withdraw LPG subsidy. You will take your pension from the Bank Sati. And of course, yes, statement 1 is correct. It will enable the beneficiaries in the rural areas to make deposits as well as withdrawals. Basic banking services. Of course, the answer is yes. Right option will be option C, both 1 and 2. Okay. So, what comes under social security? For example, let's say widow pension scheme. Widow pension scheme is a social security, right? Or let's say insurance scheme, money is given to you. That is social security. Right? Lot of these welfare schemes which are run by the government are basically part of social security. Okay. So let me stop the discussion here. Let me address your questions. Then we can close the discussion for today. Tomorrow we can take it up. If zero-based budgeting is efficient and better than incremental budget, then why is not used by the government of India? Please understand, we have simplified the idea of a zero-based budgeting, right? Outcome budgeting, etc., etc. But in reality, understand the fact. In reality, all of this exercise is not that easy. I hope you understand. In reality, all of these exercises are not easy. These are very, very difficult, time-consuming, cumbersome process. That is the precise reason. Some of them we have continued to adopt. Some of them we have decided, okay, there is no need for it. Let's not use it at right now. That's the reason I said zero-based budgeting during 1980s. Because during 1980s, there was a lot of constraint on the finances of government of India. We have used zero-based budgeting earlier, but that is a very time-consuming process. Okay. Sir, is it like zero budgeting in example as it includes bifurcation of money allocated? What is the context? Please do let me know. Sir, explain then why are they not? Okay, address now. Sir, in incremental budgeting, do we consider inflation as 20%? No. Right. No, that is not the inflation. I said we will simply increase by 20%. For some ministries, will increase by 20. For some, will increase by 8%. For some, will increase by 23%. So that is basically how it is done in incremental budgeting. Sir, how direct to mobile broadcasting technology by Government of India will affect economy? I don't know, Baba. I do not have sufficient information regarding that. I'm not the right person to answer this kind of a question. I don't know. I don't have so much of information about it. So please explain 26 basis points in gender budgeting. 26 basis points. Now please understand the term basis points simply means 100 basis points is equal to 1%. 100 basis points is equal to 1%. So 26 basis points simply means 0.26%. So compared to last year, there has been a change by 0.26%. That's the meaning. Okay. Sir, I want to know if my loan become SMA 3 and I pay EMI, then what? My dear, SMA 3, where is the classification of SMA 3? There is no SMA 3. There is SMA 0, SMA 1, SMA 2. Right? Even if you make a loan payment with a delay, certain charges will be imposed. But even after SMA 2, if you don't make a repayment, it will be classified as a non-performing asset. Okay. Sir, if budget for a ministry is reduced in a specific year, will that also be called incremental budgeting? Generally, they don't use the term incremental budgeting. Right? But if it is reduced, right, it can be, but they don't use the term incremental budgeting. Incremental means slight changes which are being done. They can change, they can increase or decrease. Okay. Bank Sati is like bank. No, Bank Sati is not a bank. Bank Sati is a representative of a bank. Our class PPT sufficient for static part, or I need to read Nitin Singhania book also? What I would recommend is, right now simply stick to what we are covering in the classroom. Right? As far as I'm concerned, this is more than sufficient in the form of static source or static discussion. But imagine if you come across a current affairs topic. If you come across a current affairs topic, and that happens, it is economy, that will happen. Right? After 2 months, after 3 months, you come across a current affairs topic, then my recommendation is read the static part of that as well. Please read the static part of that current affairs. Sir, is it like zero budgeting in example as it includes bifurcation of money allocated? Please clarify in budget allocation. Baba, I believe you're talking about the demands of grants. Demands of grants is not zero budgeting. Demands of grants is basically a record of how many withdrawals we are giving for which ministry. We are giving details. Which ministry, how much money we are giving, what is the purpose of it. That information is given. Because the ministry, I'm sorry, the standing committees have to know how much money government is allocating for what ministry so that they can evaluate them. Okay, done. So let me stop the discussion today here. Right, we'll stop the discussion today. Tomorrow we'll continue. We'll start with budgeting. We'll finish budgeting, then finance commission, then questions what are left out from banking as well as from I'm sorry, the fiscal policy. We'll cover it tomorrow. So that's it from my side. Take care. Read, revise, read. And I've given you 3 articles, current affairs article from Hindu newspaper today. Please do read it. Please do read it. Right? That is for your benefit. I know what is given in the articles, but I'm not writing exam. You are about to write the exam. Read them. Okay. That's it from my side for today. Take care. See you tomorrow.